Good morning out there. I'll be on in just a minute. Just having some technical difficulties in the background. I just need to get ready for the stream. No moderation. I gotta ask about this. YouTube's changing settings. Ugh.
US stocks extend fall, the Dow Jones down 1%. So according to the Prime Minister Office, Iraq Security Council directs Foreign Ministry to pursue legal action over the US and Saudi strikes. And furthermore, from the Prime Minister Office, Iraq says that the only government has authority to respond to attacks on its own territory. And Iraq urges all parties to avoid escalation, says it wants to keep the country out of regional conflicts. The Philadelphia Semiconductor Index set for a fifth straight day of decline, last down 1.8%.
Just a few minutes here, guys. This is a good down move right here. This is this move right here. You're now going to see more than likely a rip up here into 1030. Gap is closed. And this is also value down here. Just want to wait here until 1030. Just check one more thing. There is, yeah, this is S1 right here. Let's open that up. And 11. There might be one more low to put in down here at 736. You might see it something like this. Might see one more low right about here.
Sanctions oil tankers.
That
over
should
Iran
start coming up
ties.
to this 1030. Try to sell it again right in here. We are targeting too, just so you know. $726.35. But I don't think we can get here right away. It's going to be an all-day thing. So just down here, that's the target. But for us to get there, it could be something brutal like we're smashing down to 30 and then whipsawing back up and then finally slamming down here in the end of the day. It's going to take all day. And there's going to be some whipsaw action along with it. Give me a few more minutes. Sorry, I got to put a shirt on. I'm naked. Just hold on a second here, guys. Yesterday I had a blue shirt. Today I'm naked. We're super bullish. I'll show you guys the. I have some snips from. I'll have some snips that I posted yesterday. You're gonna get the volatility regardless, even if it's going up.
So according to the Treasury website, the US issues sanctions against
Nothing happens. Today's FOMC day. So what you're gonna get is you're gonna get a series of ups and downs, like we get every FOMC day. I'll show you I got some clips here. I'll show you in just a minute.
And the US sanctions Chinese entities over Iran ties.
The key here is to be grabbing the bottom dip. Remember, your mom was. Let's get rolling here. Almost there. They didn't even take it that high right there. They took it right to this one. Woo!
According to the Telegraph, China to send rocket launchers to Iran.
Yeah, we're not even that down yet. Hold on here, guys. Let me just get a couple more things right back. Let me show you this really quick. So this is the gamma that we wrote on. This is the gamma that we wrote on Monday. So we haven't even come down here yet. We'll take a look at gamma again today. We're just kind of like leaning here. That's a 1 minute chart. The 1 minute chart looks really bad. It's not bad. I would really like to see us get down here to this 70. I think it was 7,300, but I think we can also gap close this if we get enough vol. We'll talk about it here in just a minute. We're gonna go over like the, like a hawkish no cut, the 25 BPS hike, 50 BPS hike, and then a dovish no hike, something else. We'll look at it here in a minute, but I'd like to see us get down here quickly if we can. This is Thursday, but this should be a Wednesday. Here's FOMC, somewhere right in there. We'll look at the gamma for today, but I remember the gamma on Monday was set for, I think, 7,300 for today. But I think we can get down here even if it's only brief. So give me just a few minutes here, but I'll be on in just a moment. I just gotta grab some water now, and I was running a little bit late. We had some technical issues this morning with I don't know what's going on, but I used to not have to reset my internet, but this past week or two, I've been resetting my internet every day, and I don't know exactly what's going on in the background. And YouTube is changing quickly, and then Streamlabs had like 3 different updates this past week, so I got to see, what the bugs are and stuff like that. At any rate, just be awares of this, and also to get here is not going to be a straight line. It's going to be nonsense, like bounce up, back down, and then we could even whipsaw into this close here and literally come straight back up here. So We don't need to be in Thursday to be way up here. So we'll take a peek at it here in just a minute. And plus, we've got some reports today. So is today, yeah, we got reports today. So we'll start taking a look at that stuff as well today. We looked at some of it yesterday. Plus, I'm waiting on a doctor's appointment, but or a phone call. I haven't had it yet. No one said anything to me. Just give me a few minutes here. And if you're a bull, you just want to be waiting down here in case we can catch um, a dip. And then, depending upon your own thesis on what you think happens today, I'll give you an expectation for movement. And we're gonna also take a look back in the 2022, and then we'll take a look at 1996, and I think one more, or 97. I think we had two. I think it was February 5th or March 5th in 1997. Don't hold me to this. We'll have to look at it, but it was a very long time ago. But there was a series of Ben Bernanke gave, I think, one or two hikes. What happened was Bernanke came out, and we started selling on the bell at 9:30. We sold all the way down. God, I forget exactly what it was, but we like sold down into like 2:30 in the afternoon. And then Bernanke was able to successfully tell the market that it's only one or two hikes at max, which is very similar to where we are right now. We ended up climbing the wall of worry before the close, like way up here. So we'll take a look at it together as a group today. And I'll try to find some news from that hike. I believe it was 1997 in February or March. I was a young buck at that time. I was a young adult, and I don't recall that time period. I recall of course the internet build out, and I recall the crash that took place. But that's how we got the greatest generation of this time period. You'll always hear people say, like, if you were a kid in the early 1990s to late 1990s, it was like peak optimism for not being a boomer or part of like Vietnam, that kind of stuff. Being a part of the like 1 foot in the old pre-internet, 1 foot in internet generation. So I'll take a peek at it. Bernanke was very successful, so I would like to see some kind of a trade like that today. So all the way down and then straight back up here into the close. Give me just a few minutes here. I'm gonna grab water and a coffee. Remember, you're gonna get new flows here right at 10:30. All right, check one. What is that? Hey, good morning. How are you? Anxious. I am. They've been just like testing me and testing me and testing me and X-rays, CAT scans, PET scans, fucking blood tests for like my organs. Blood tests are all coming back good. They're not finding like layering. Like even if there is something there, it's not layering like it's stage fucking 10 or something.
So, a reminder in 5 minutes' time, we're expecting the weekly EIA crude oil inventories forecast a build of 1 million, prior a build of 2.01 million. Gasoline inventories forecast a draw 1.092 million, prior a build of 0.765 million. Distillate inventories forecast a build of 0.5 million, prior a build of 1.395 million. And Cushing inventories prior a draw of 0.674 million. The Nasdaq 100 falls 1%, the S&P 500 down 0.7%. 1 minute remaining. I'll be dealing with crude oil inventories. Ten seconds. A draw of 7.167 million, a draw of 7.167 million. That's compared to the forecasted build of 1 million. Gasoline inventories, a build of 0.007 million, a build of 0.007 million, compared to the forecasted draw of 1.092 million. Distillate inventories, a build of 1.062 million, a build of 1.062 million, compared to the forecasted build of 0.5 million. And Cushing inventories, a draw of 0.771 million, a draw of 0.771 million. We have posted the EIA weekly inventories report on the feed for those interested. The Treasury say today's Iran sanctions target Hormuz monetization. And the US Treasury just further saying that sanctions target Iran's Hormuz extortion network. US crude stockpiles, excluding SPR, fell in the latest week to the lowest since September 2018. US Brent crude futures extend gains after EIA storage report shows larger than expected US weekly crude stocks draw. So, according to sources, Iraqi Prime Minister calls off meeting with Saudi Crown Prince. So, a bit of context just behind this latest headline with the Iraqi Prime Minister calling off meeting with Saudi Crown Prince. It's a bit of old news. We did see that earlier reported in the morning. So, coming from IRNA, Kuwait's foreign minister meets with the Prime Minister and army commander of Pakistan.
Sorry about that. I had to take a phone call with Joe Donut. We're talking about, you know, I got supposed to be getting a call from my doctors today, and this morning I called this morning, left a voicemail. So I'm fielding a lot of phone calls this morning about it from different people. But Joe and I were also talking about. So we have a bunch of stuff to go over here this morning. First thing we're going to look at here. Give me one quick second here. I haven't heard or read too much about this. I haven't seen anything on this. Oh, excuse me. I haven't seen any talk on this subject. So we're gonna chat about it here. I haven't seen. There's always like always like an argument like because of positioning, not because of belief in it. So like I believe in this, or I'm gonna push this narrative because I'm short or I'm long or whatever. It doesn't matter what your positioning is, but like you're telling bullshit to get that narrative to print for you. It's kind of like the dot plot or the future Fed funds rate, where it's pure gambling and has nothing to do with are we actually getting a rate hike, a pause, or cut, or anything like that. Now, this narrative is not public. Has not gained traction anywhere. I haven't seen it spoken about anywhere. Maybe you know somebody out there that's spoken about this. But I couldn't find anybody speaking about this. So we're going to chat about a few things. And what's bringing it up for me is, or what's bringing up this argument is I went back and looked at the 2022 rate hike cycle. I went back and looked at the surprise hike from, I believe that was 1994. But more importantly, the part that I want to talk about is what was not discussed in any of these narratives, which was, I believe it was 1997. Let me just take a quick peek at it right now. So was it 1997? Let's check this right here. Yep. There was a 1997 Fed rate hike. This was Ben Bernanke. And it was March 25th. I said February 5th. It was March 25th. And we got to 25 basis point hike. And what happened was we got shanked from the open into the press conference. Now, I don't know if we get the hike today or not. And we're going to discuss like what outcomes could take place. Whether we get the hike or not doesn't really matter, in my view. I think whether you get the hike or you don't, it doesn't matter. What matters is the press conference today. So when you get into that press conference, when Bernanke got into it, March 25th, 1997, you can just go on Google for yourself if you want to do your own research or whatever, and look up stock market news from March 25th, 1997. And so what happened was we blooded all morning on that date. And Bernanke came out and he said, point blank, he just said, this is not a hiking cycle. It's a one and done to extend the bull market. And it was March 25th, 1997. Inflation stood at, ready for this? Inflation stood at 1.94%. This is back in the day, y'all, when we weren't as piggy. Well, we were actually piggy back then. But 1950s to 1965 was probably one of the best periods in U.S. history. You had post-World War II, people coming back. You had people for the first time really taking out mortgages, car loans. It was just like everything kind of being hoarded out, or raped and pillaged. The raping and pillaging that has been going on here in this country. This is a time period where Republicans and Democrats today would be considered communists. When we first introduced Social Security and it didn't become a part of the slush fund, which people argue that it didn't, but it did. This is a time period where we first introduced permanent taxes. We used to not have permanent taxes than we did at that time period. This is a really good time in America. So 1.9% inflation in 1994. You think about it relative to today, catching a hike at 1.94% inflation today is laughable, right? We wait until it goes up to 4.8% today, but back then there wasn't inflation. Things were really good back then. So we did get a rate hike that day, and Bernanke was able to talk the market down. What we did was we sold all morning long, and then the moment that he spoke to the people, or the press or whatever, he was able to talk the market into believing that we were not entering an actual hiking cycle. We're going to talk about the chance of us, or the chance of like Warsh hiking 50 basis points, 25 basis points, and like saying we're starting a hiking cycle. It's very low. It's like 5%. There's something else fascinating too that is going on here, which is, I'll bring this up really quick. I think I showed this yesterday. I'm going to show it again today. And this is what I was talking to Joey Donut about. Hold on here.
Iraq's Kadib Hezbollah says response to U.S. Saudi attack.
I'm going to turn this off because we don't want to listen to this. This guy's fucking useless. What I want to show you next is something very important. Am I in the right place here? Hold on here. Now, I've been tracking this JPM collar here for a significant amount of time. And what I want to show you here is, like, these are quarters. These lines right here are the actual quarters. And when you come into a quarter, you have some of the best opportunity to unwind. Not the month. You can unwind in a month, but the quarter is very important for the strikes on a JPM collar. And it's very difficult to get underneath while you're in a quarter, the middle strike on a collar. It is extremely difficult. You can see one here. We were not able to get underneath it, but there was an unwind into a new quarter. We were not able to get underneath it here, nor 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 here. Now, we were able to get in here in March 2025, but that's only because the quarter ended. You can see we actually held the quarter. You can see this middle strike, we actually held it. We were able to get down after the quarter down, but we still held this next middle strike here. So the middle strike on the collar is very like this. It's the intent of the collar, of the bearish seagull. It's the intent of that collar is to limit volatility in the marketplace. The reason that I'm bringing this up for you is because we are very close to this one right here. So you can see where this one is right here. This is 7090. And it's not like something where, well, Cap, we can do all this down here and slam into it like this. That's not true. It's normally like something like we're bouncing here and going higher. Okay, so like somewhere right in here, which this is where that low is. And we don't have a lot of events. We don't have a lot of ability. We have some ability to get down here. We have a small unclench after the month ends to get down here. But it would be brief. Like you're talking like a week at most, like a week. So we don't have any ability to get underneath or get near this except for two things. FOMC today and an unclench on the 1st. Or post the 3rd. So if you have a squeeze up here or anything like that, maybe you can get down here. Or maybe they pin us down here, we come into the first week. And no matter what, this is the key point here. No matter what the outcome is, no matter if you're going up, then to come down, or you're as deep as you can get a little bit more unwind in the first week, no matter what that is, you ready? You have seen the low for the next 2 months. So what happens is you cannot go down anymore. Like it's like 95% chance, 95, maybe even higher, like 97. You cannot go down anymore. So that would mean that if you're like loading the market with VU or SPY or something and you're selling fucking bucket loads of puts, that for the next 2 months, right into September, last day of September or whatever, you're never going to be back here, ever, not for a minute. So um, the point that I'm trying to make to you is that you would be going up for the next 2 straight months. You would get no August bear, no September bear. September 31st, you could potentially get a correction for October post quarter into the first month of the new quarter for October. But for the next 2 months, it would just be up, period. So you should like sell everything that you have and buy that low and sell puts against it for the next 2 months. And it's literally a sure thing, side of the barn softball trade. You cannot miss that trade. So just be aware of that the closer that we get. And we're already trading on SPX currently, which is a little bit different than, let me get rid of this really quick. We're trading 7374. If we get a dump down here, if we can catch a dump to close that down there, that's 724, 7200. It ain't going to matter. It ain't going to matter if we come back down here and retest the low. None of that's going to matter when you come back into September 31. It'll be like, you won't even be thinking about it. It'll be a wick that you don't even see. So you only get like 2 opportunities for this. You get today, and you maybe get the first week, potentially like the first week of the new month to even get near there. So you should be thinking about where we are right now, how close we are to a bottom. And if you were to scale even this chart out when you come back to look back in the end of September or whatever the high is for the next 2 months, you're not even like, it's going to be like a millimeter. It'll be like a number 4 line on a number 4, like a tiny little line that you're not even going to notice for the next 2 months. There's like literally 97% chance that you can't go underneath that number. And I don't have an example of it for you. I don't have of any fucking quarter. I don't have a single example of it. I've got a quick example of one that was post for like a week after the month, but it didn't matter the end of that. The rest of that quarter, it was literally vertical, like green, 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 green day, green day. You're talking like fucking 60 days of straight up. So be aware of that today. Be aware of that the first week next week. That if we can catch any kind of a low near 7, and I wouldn't say target 7090, I'd be targeting like 720, which is right fucking here. Do you understand what I'm saying? Like it could leave you behind today. And if you get that, Warsh, testimony, and or not testimony, but the interviewing with the journos, and he starts telling the journalists, "Hey, look, this is it, right?" It would, to get underneath that 7090 would be like World War III with a nuclear bomb. Like that's how bad it has to be. It has to be like shut down everything like COVID. It has to be something very severe. And you can't trade that. You're not going to trade a nuclear war. You're not going to trade a COVID, none of that kind of stuff. So, and I want to harp on the rest of this, which is, I think I said to you that Trump has likely okayed 1 to 2 hikes right now. They're going to save the midterms. So you figure if we're only uppies for 2 straight months, that pulls us right into just before the midterms. There'll be some elections, but it's just before the midterms. And then you've got stock market just cranking up into midterms. And the street is, at that time period in September, like September 30th, 31st, the street is likely going to be able to predict the outcome of most of that midterm election. So let's say at that time period, it comes out that the Republicans are going to maybe lose the House, but they win the Senate or the tying vote. I think best case scenario, maybe they lose, or not best case, but worst case scenario for the current regime would be that they maybe lose the House by 1 or 2 seats. I think if you're a Dem, that's the best you're going to get. The Senate is most definitely going to be won by the Republicans. I've heard rumors that that's not true, but that is not true. It's literally going to go Republican, even if it's down to a tying vote with the vice president. And so, if you get that kind of an outcome in that September time period, if the street doesn't believe that the Democrats are going to take control, because they do think, I'm telling you right now, the street thinks if the Democrats take control, we're going into a recession. And that's control of the House of Reps and the Senate. Now, if that doesn't happen, you'll get a renewed bid from the street in that late September, and they will go long as fuck, and it'll be just like Trump's first election. In Trump's first election, this past election, for his second bid as president, where you saw carryover. If you remember when midsummer, when Trump was running, by the time we got into the fall, the street knew with a very high set, like I want to say in July, the street predicted on Bloomberg, on a Bloomberg terminal, not publicly, but on a Bloomberg terminal, they predicted with a high rate of certainty that Trump would win. And when they predicted that, there was follow through for that second quarter. If you remember, like Tesla just ramped for like 6 more weeks after the election. And it just kept going vertical. There was like a knock-on effect. So you get through the midterms, there's a knock-on effect to the upside into the end of the year. And the market just goes vertical. It literally does. So this kind of lines up to, Trump coming into this midterms with, like, he's done what he needs to do. Like, I've given the okay to put a hike on, or at least the threat of a hike. I get an up market up into at least end of September, and now I got to do my job to stump to get that election in the bag for me. That's Trump, at least. By the way, I'm a Democrat, so, I'm talking about something that is against what I want to happen here. I'm trying to be objective about this. So just be aware that anything that you can get today, any kind of doom and gloom, right now, or the rates decision before we get to the reporters, and you just want to hear Warsh say those words, which is basically what Bernanke said back on March 25th, 1997. Go look at the date. You can Google search it, and they have reports that you can read about what Bernanke said. And the market went violent. It went violent, and recovered very quickly. So, again, you can see it here. In March 1997, inflation stood at 1.94%, which was inching up ever so slightly. The glorious 1990s economy was roughly 6 years into its 10-year-long expansion. And that's about where we are, right? 2022, 2023, 2024, 2025, 2026. That's year 5. Right, so it's fairly close as well in time period. And the quote was, "The slight firming of monetary conditions is viewed as a prudent step that affords greater assurance of prolonging the current economic expansion by sustaining the low inflation environment through the rest of this year and next," read the Fed's statement. So you just need something from Warsh today. And I'm going to read something else to you here at this moment for today. Let me get back into this other thing here. And we're going to look at some gamma and stuff for the day, too. Let's go look at this. We're just parked up here, trading sideways. 5-minute triggers coming down. This is what I'm looking for here, is this 5-minute trigger. So we're going to look really quickly at I'm going to read something else to you, which I agree with as well. With there's a comment in here about going on vacation. So these guys, all this week, all I kept hearing, all I kept reading from the street, at least, right? This past week or two, all I've been reading from the street is, we want to print 2% down minimum on Fed Day. And I'm scratching my head all week saying, why is that? Why do they want it today? There's got to be a reason, and we know what it is. It's Labor Day. It's the last summer vacation before the kids go to school. So these guys are all banking on what? They're banking on closing their shorts, right, or their puts or whatever today. They don't want to wait until next week, and they want to get long in a big major way, and that kind of ties in with the 7090. Now, whether they get it or not, I don't know. You don't know. Nobody can predict that. But I want to read to you this article from last night that I read. previewing the Fed's extremely uncertain July decision and how JPM and Goldman are trading it. Most pundits and sell-side analysts see the central bank leaving rates on hold, especially since last month's inflation reports came well below expectations. Now, that is a fucking lie. That statement is bullshit. When you look at the month-to-month PCE and CPI, they do not tell you any story. You need the time frame that is 3 to 6 months to a year to begin telling any story. So if you look at that story in a higher frame, it's extremely inflation mooning. It's not inflation coming down. So this is bullshit here, but there's some stuff in here that I want to read to you that is important. So most pundits and sell-side analysts see the central bank leaving rates on hold, especially since last month's inflation reports came well below expectations. And there are no dots or forecasts to update this month, as highlighted by the latest Reuters poll, which saw all 104 forecasters expecting an unchanged rate decision. That shows you how bad forecasters on rate hikes are, that they don't see it from just looking at monthly reports. It shows how actually they just suck. They literally, like, I'm telling you, I'm like not kidding you, like journalists today suck. They're worse today than they were just COVID. They were bad in COVID. Today they're the worst. Like, you've got AI reports, AI, like, go look up some of your reporters. Like, literally go, if you read a news article, you should go out and like Google search that person and see if they're actually a real person in real life. They're not. It's like a fake fucking person. You can kind of read it too in the text, right? And then even real reporters today, I call them out on Twitter. You'll see me sometimes like literally call them out by name and say, how the fuck did you write this garbage? How the fuck did you go to the best journalist school in the country and you wrote this article? So you're either being paid, you don't care, it's one of those things, or you did a surface analysis. Like, you literally just got a report that day and you wrote an article, and the editor doesn't want to tell you the context of that data. It's like, we're in like peak at this moment, peak manipulation of truth, like peak. And the shocking part of this is this data is not unavailable. Like, do you remember like during COVID, you would have like trying to like hide data or hide information or question facts. We're beyond that today. We're not in that world anymore. That world is over. That world is gone. Now it's just fucking facts are out there, and we're just gonna not tell you. Like, you can literally just go right to the fucking Fred, right to the BLS. You can go right there and just look at the data for yourself, and no one does. They just don't care. So we're beyond. We're probably like, in terms of our information today, we're in the kind of fraud that we were in during 2007, 2008. Like, for the fraud that like comparable information fraud today is shocking, and the most bizarre part about it is that it's blatant. It's just pure blatant. I'm not even going to bring it up. It's right there. I'm not going to look at it. I'm not going to print it. It's kind of freaky. So, so anyways, 104 forecasters expecting an unchanged rate decision. 78 out of 104 see no change through the year. That is a shocking number. That is an absolutely shocking number that many people, analysts, are saying that. So you've got 66% of respondents now view the likelihood of a rate hike this year as high, a significant shift from the low sentiment recorded in June. Nonetheless, outside of the poll, Citadel gave an out-of-consensus call and sees a 25 basis point hike today. And I think that they are making the right call, even if you don't get it. They are the only company out there making the correct call. We should get a hike today. We are due for a hike in a major fucking way. Now, we also know that no one wants to touch this. We know that at the last Senate hearing, we know at the last FOMC meeting, that literally nobody, like not Warsh, no one at the Fed, no one at the Treasury, no one at the executive, not even the fucking journalists. If you remember, the journalists were very, like very soft gloved on his first FOMC. All your senators, all your representatives were kids' gloves, right down to what's her name, Rashida Tlaib. Rashida Tlaib. She was paid off too. So like all of your elected officials, no matter what party they're from, no one is willing to touch it. Okay? Nobody. That it's there. So everybody's on board for this. You get what I'm saying? So I think Citadel saying you're getting a hike today is the right call. Like the dose of reality. The 3 and 6 month bills and the 2-year bill just this past week flashed, you need to hike. So the Fed has also said that they're going to rely upon the market and the bond market, the stock market and the bond market, to tell them that it's time to hike. You have a decline front running a hike today. That's what this decline is. This is pricing in a hike, whether we get it or not. And you get the bond market flashing, we need a 25 basis point hike. So I think it's very responsible, believe it or not, of what's considered one of the shittiest hedge funds in the world to say this. I think that they're correct in making that statement, that you're going to get a 25 basis point hike. And that is why the stock market is in decline. We are pricing one in, whether we get it or not. And that's actually good for where we are, because if we don't get the hike, it's vertical. If we get the hike, we've priced it in at this point. It's just a matter of finding the fucking low and getting long, and it matches up to the 7090 as well. Now, Citadel said that, but then a softer than expected June CPI report, weaker non-farm payrolls, and the latest drop in the price of oil have given the committee room to wait, and forward guidance is not expected to see any forward guidance given the alteration in communication policy. This would allow officials to assess how the Middle East conflict develops, particularly after the recent escalations and subsequent de-escalations between the U.S. and Iran, which has resulted in volatile oil prices. But they don't include that it's greed. It's crazy. Policymakers have previously cautioned against responding too quickly to what may prove to be a temporary shock, although underlying inflation remains well above target. For Chair Warsh, the most likely outcome may therefore be a hawkish hold. So hawkish hold. You don't get the rate hike, but you get the talking to, right? We're really close to a rate hike at some point. But it doesn't matter because we've already priced it in. Priced it in today. Okay, does that make sense? So for context, in the June projections, 9 of the 18 participants who submitted forecasts expected at least one rate hike this year. Chair Warsh, during the last FOMC meeting, the Fed completely switched up the statement under Chair Warsh's leadership in first confab. It was dramatically shortened, removing all forward guidance language, and reinforced the committee's commitment to return to 2% inflation target. As such, any even minor wording changes will be closely scrutinized. And I think that even brings up the Bernanke thing. In that 1997 Bernanke FOMC statement, he was crystal clear that this is not a hiking cycle. And he reinforced it during the press conference with the journalists. So you would expect that even today, even if you get a hawkish no hike, you're still going to expect or look for, maybe not expect, but look for that language saying, hey, here's a hawkish no hike or a hike, but we're still not in a hiking cycle. We're trying to extend this market, price stability, maximum employment, all the usual suspects. So given this is only the second meeting, or it is yet to be seen whether there is a consistent statement formula and format. Given this is only the second meeting under Warsh, and the following press conference, the chair is likely to face questions surrounding the inflationary effects of the Middle East conflict, the newly announced task forces, and whether the latest data could bring forward the timetable to action. Given Warsh's distaste for forward guidance, he is unlikely to offer a clear signal. He will likely emphasize that all options remain open and that future decisions will depend on the data. Desks anticipate a continued emphasis on inflation side of the dual mandate, though without offering any type of commitment for future hikes. Credit Agricole do not expect any major updates from any of Warsh's 5 task forces, as it may take until closer to the end of the year for recommendations to be finalized, and likely means no change in balance sheet policy for the time being. And over a longer horizon, they remain skeptical that aggressive shrinkage will end up taking place. That's probably false as well. He can answer some of the questions on the 5 task forces because there are already changes being made at the Fed currently, right now, that you can see. I'm not going to claim credit for that, but how the reporting is taking place is being consolidated currently. The data that you can pull from these websites is all being changed actively right now. So yes, there are actually changes that are already taking place. So if they bring up that question, Warsh can at least address that positively and say, oh yeah, we're already starting to consolidate a bunch of this data for release for you to have access to it, even though it's not in the news. That is taking place right now. Now, the FOMC statement and press conference, the question hanging over the July FOMC meeting is whether the Fed will display patience or whether it has run out of patience, according to Morgan Stanley. The answer is that the former is the former. The bank expects the Fed to keep the target range from the Fed funds rate unchanged. MS also thinks that the statement probably will be unchanged, reiteration of the ample reserve policy, economic activity, and expanding at a solid pace despite elevated uncertainty. There's been no major indication on productivity growth or CapEx. None of the econ data is negative. It's all good. The economy is cranking right now. Meanwhile, while softer payrolls and softer CPI report may have reduced the pressure to tighten since last meeting, upside risks to the rates, including persistently high oil prices, a more hawkish Fed function, or stronger AI-driven investment lifting neutral rates. I'm going to tell you right now, they can fucking call it whatever they want. They can say that it's fucking war. They can say it's tariffs. They can say it's this and that and this and that and make up bullshit all they want. None of it matters. We are in, ready? We are in cyclical inflation. And if you look inside the PCE and CPI, you can see that it's rearing its ugly head. And this is like a cyclical thing that happens no matter whether you want it or not. And it's all greed. Like the whole thing is literally fucking greed. It really is. And then that greed just starts to turn and tumble into, I need to be paid more. I'm going to need to raise my prices because these guys are raising their prices. All that kind of shit just kind of starts stacking up. So, hold on one second. We're going to get to the good stuff here. Blah, 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 blah. I want to get to the juice on this. Hang tight 1 second here. Maybe I didn't read it. I thought I read it in this article, but maybe I can't see it in here. I don't want to read you the rest of this because it's kind of crap. So here's the market reaction to today, or the possible outcomes. The Fed does a 50 BPS hike. The SPX falls 2 to 4%. The losses would be tempered if the Fed included messaging on this being an ad hoc hike to get above traditional inflation measures, but this move should not be conflated with a series of hikes. The odds of this happening today are 1%. 1%. You get a 50 BPS hike, and you get the message from the Fed today. So we blast down 2%, 4% on the day. Then you get the message from the Fed saying that this is not a hiking cycle. It's one and done. And this is harking back to the Bernanke 1997 rate hike. The second chance is a 20% chance, or the second outcome is a 20% chance. That is the Fed hikes 25 BPS. SPX falls 1.5 to 2% today, with potentially double the decline experienced in NDX and RTY, likely outperforming on the move lower given the market shift to anti-momentum, anti-AI plays, then the odds of that are 20%. Now remember, if you get the 25 BPS hike today, you get the good language, right? And we're near that 7090. This is going to be a place where, as a retailer, you're panicking. You're like, oh my God, we're going to sell the world. Everything is going to shit. And the smart guy on the street, that trader, is closing his puts, and he's longing for the next 2 months. So while you're looking for doom and gloom and crashing and all this kind of stuff, they're actually selling you puts. They're longing the markets, and they're waiting for a print here in like September 30th. They're going on vacation at the same time. And you're going to be hand-wringing for the next week or two about this while they're laughing at you. You get what I'm saying? So you got to be aware of that as well. And that's a 20% odd of the Fed 25 BPS hike today, and then the good conversation that we're not in a hike cycle. The next option is a hawkish hold. SPX is up 25 BPS. So what you get is you get a spike. Let's go over here and look at this. What you end up getting in here, you come into the 2 p.m., which is right here. Sorry, excuse me, wrong one. This one right here. We'll make this thick so we know what's going on here. So what you end up getting in here is you get a spike up. You know, no hike, no hike, no hike, no hike, something like that, right? So you're like ripping faces up here on that news. You clear out the gaps that were left from the overnight, right? And then you get a slam down in here, like violence, like whammo down into the close down here. And this is the hawkish hold where you're up 25 basis points, then you're down 50 basis points, and that's the 1% move that's priced in today. You get the whatever the upside is that we marked off in the overnight, and then you get the downside bloodbath into like 732. Maybe not that deep, but like somewhere down in here, or where's that weekly at? So you end up getting the spike up, right? You close out all of the gaps from overnight, then you get Warsh coming out, right, and talking again. He's all hawkish. This is the hawkish hold, right? Like no cut, no cut, no cut, no cut. And then you get Warsh saying to you, you know, inflation bad, everything is awful, oh my God, terrible. And we're down at that weekly low on the close. But then you've got all of these tech earnings, and you've got the bottom of the literal market down here. This is literally the bottom of the market. So they're selling you puts down here the street, and we're ricocheting straight up into the close and beyond, like green bars for 60 days, literally. So you've got the hawkish hold, SPX up 25, then down 50 BPS. Our base case as the Fed, this is a 50% odd of this taking place today. So you're selling down into, like we normally do, quick rip up, close the gap, and then straight back down, and then you're buying this right here. And this is a 50% chance of this happening just like this today. So you get the hawkish hold, right? Our base case is the Fed holds based on the strength of labor markets growth, but likely wanting to stay vigilant on inflation, where recent energy market price action suggests another wave of disinflation is coming. A 10 BPS move in rates produces a beta to Dixie of about 0.5 to 0.6 and 1.5 to 2% for SPX. So 0.5 to 0.6 on Dixie, and then about a 1.5 to 2% move on SPX. Let's measure that out. I think it measures right now about that 2%. Where are we at? 930. 2% down move is right here. That's that. This is the 2% right here in the downside move. So down to that weekly target at the end of the day. We could see a hold lead to a weaker US dollar, giving long positioning as well. So you get the spike up, spike down, and then the dollar starts to weaken and the market starts to rip faces off again. Now, there's one more outcome here, and this is the dovish hold. So the odds, the one I just showed you, is 50%. The dovish hold is SPX gains 50 BPS. That's 1%. This is the best outcome for stocks. So you come into this meeting, right? You have a quick, let's say you get a quick rip down, right? Quick, like not violence, but you're down here like S3, and then it's boom, 1% up. You hit the target, 746, 748, and we're going to run it hot again. Now, this is a 28% chance of happening today. The other range of outcomes where we get the on the far end of the curve, we get the Fed hikes 50 BPS. We start a hiking cycle. On the far end of that, you get a Fed rate cut. That's a 1% odd. And SPX would actually lose 1%. We would go down here in bloodbath. And that actually is a bad outcome. We would likely fuck around down here for a long time until we actually got our hike. SPX loses 1% to SPX gains 1.5%. So no hike, a Fed rate cut, we bloodbath, and then we finally, after this, crank back up for 1.5%. The reason for the potential negative outcome is if the market perceives the Fed as having lost its independence, which would be reflected in higher yields, wider break-evens, and higher volatility and weaker stocks. I don't see this 1.5 holding. I see us going right straight back down again. And that would be where it would bring up all these questions of Fed independence. It would be an out-of-control Fed, and likely the bond market at that point would start raising the short end drastically over 5%, which would be brutal. Now, what are the options pricing in? Options that expire on July 29th, which is today, are pricing a 0.8% move based on July 28th prices. For reference, recent CPI moves have been 1.1% moved into the event. So when I talk to you about things like, you spike up here, right, and then you're like down, this should not move the needle. Does that make sense? Like you're up here and you're down here. You could see another whipsaw up before we can come down into this. Just like a couple whipsaws in here. And that would be post this Fed statement, the Fed statement and the Fed. So for us to break out of like the 1% range to do a 1.5 or 2% range down, you're going to need the information from the the Fed statement and then the presser to open the door to more than that 1%. That 2% move to this weekly. You can't get that move down, so they're gonna slam it down here, and then you're gonna get the information. If you get the negative information, then we can actually go down below. You'll see more put buying and more hedging activity. If that makes any sense to any of you out there. I know some of you it's not going to make sense, some of you it is. We're just parked in here right now. We don't even need to go down here. We should at some point, so you can see this, should at some point just start stalling in here, waiting for the Fed rate decision. So start marking this out like this. We might hit that bottom S2 down here at some point, but just this right here, something like this for the rest of the afternoon. We can even draw this in. Something just like this right here. It's 2 p.m. Move that one right over there. We don't need to go down here. We can. We just go right down here, just messing around. And this is kind of where we're going to figure this all out, right in this 736, 737, 735 zone. That's way better. I can actually see myself now. Let's just measure this really quick here, see if we're already at our 0.8%. There it is right there, 0.8%. So the option market has already priced this in. This is the downside move. For more downside, you're going to need, you could scrape this basically, possibly, but the move is done for the day. So the downside move priced in is already done. Just a matter of trading sideways until we get new information that could open the door lower. And I also want to draw your attention back to two other things here. Remember that this is the price act. This is the pricing in of gamma. We're trying to get as deep as we possibly can in here. We would need new information. We would need new information to even get down here, like negative information. And I even wrote this on Monday, new information like FOMC. Now let's look at, I don't need that. I do need that. I do need that. I do need that. Don't need that. I don't need that. I'm going to go and look at the current gamma regime on 0 dates for today, or gamma exposure here. See if we can there we go. Can we do this like together? You guys can all see that, right? We go right here. We want to be looking at this one. Oh, maybe a little bit smaller, right? You guys can see this. Thank you, Borky Bork. And on 0 dates, I just want to take a quick peek at this. And this, we're going to look at SPY and SPX. Like, there's a wall here on SPY of 735. That's exactly where we're parked right now. We're right on the 735. To open up all of this stuff over here, we need some kind of market news. Like, we need to get the rate decision, and we need to also get the, so for us to trade underneath this, we're parked right here right now. For us to go underneath this and start trading all this stuff down here, we do need new information that's relevant to the marketplace. So I want you to also look at this one right here. This is 730. I think that's where the weekly trigger is, somewhere around that 730. To open this one up down here. On the upside, we have 742 as a call wall. Max pain is at 740. I think that's 740. But then you also got this one up here. This is 748. So if you get one of the good outcomes, you could also see like opening the puts down below here. You could see the calls be opened up end of the day and trade this 748 into the close and potentially even into the rest of this week to 748 by Friday. So just be aware of this wall right here and it being opened, and be aware of this wall over here and this wall being open to the downside. Now we're going to also look at 3 dates here. Right. This is your, so this is today. This is Thursday. This is Friday. We have 755 on the upside on Friday, 740 on the downside on Friday. And then on Monday, the 3 dates for Monday, we've got really bad here, right? It's pretty bad, right? But this is going to change, isn't it? All of this gamma here will change for Monday, so this is unreliable. We're going to have a bunch of gamma blowing off. So we're not going to take a peek at that. We're just going to look at that 0 date for today, and then the 2 dates for Friday being 740 and 755. And then we're going to also look at SPX in here. If you want to trade this on SPX, we're really at 0 dates here. And you've got 7,300 as the wall. Let's just look at that. That's right here. So like worst case scenario, 7,300 into this bell as a target. I would like to see this go deeper though. If you see this line or this one right here, hold on a second. I need to take this off of this this close here. If we can get a negative Fed or a rate hike or something like that, we can open the door, not just to trade this, but potentially to trade all the way down here, 728, 7,200 into this bell. But we're not there yet. We don't know. So I'll leave this at 1530 for the close here. But what you could do is if you end up getting like, hey, we got spike up, right? We got the move down on, let's say, a hawkish Fed. Another spike up, believe it or not. But then bury the close down here if everyone's buying puts into the bell because they're all bared up. And what ends up happening is you get the street is able to get long, sell you puts, and this is the bottom for the next 2 months. Pull this back right here. And we're going to look at 2 dates in here. You got a put wall here at 730, but we could open this up. That's 7250. That's the one that I just showed you. We can open this up if we get underneath the 730 and you get the Fed saying something like, here's 25 BPS. I'm a hawkish Fed. I'm a this, I'm a that, or whatever it is. We can get down and drill through into the 725. And this is extremely close to that 7090 number. If you're blasting through this, you're blasting through in here for a little bit. You know, this is the 709. And if you look at this right here on like a 2-month or 3-month chart, you're not going to hit this number. It's going to be like you're coming down, sweeping, and then moonshot to 7,800 at the end of the year. You're closer to the bottom than you are the top for the end of the year. You get what I'm saying here? So anything we can get here, anything we can get here. And right now, you're actually right here. You know, that's the bottom right there. So we're currently trading somewhere in here, right? If you could even open this up at all, like the 725, any of this right here, you know, 2 months from now, or excuse me, 5 months from now, you're looking to trade 7,800. So you're very close to, and you only have, I think, 2 events. I think you got like today, and you got a 1-month unwind the first week of the new month for August. So I don't think you're getting a September. I don't think you're getting an October, or you're definitely not getting an August bear, a September. You're not going to get, you might get an October, but that would depend upon the midterms. That would be the only thing if there's any uncertainty. If there's no uncertainty in the midterms, we're going to literally go violently upwards into the midterms, and that not likely lasts another 6 weeks thereafter, just like this last presidential election. So it's all positioning in here. That's all it is. Get positioning to get long into end of the year. Let's get rid of this one here. I'm going to go back in here. You can see we're just parked in here. This is 0.8% right here. It's going to probably be parked in here. I'm not going to do shit anymore. Just going to sit here and just literally be parked in here until 2 o'clock. There is nothing to do here. Like nothing. Don't do shit. And if you're a bull, I think someone was saying something about being bearish in the day. Every single FOMC, we have a spike down of some kind. And no one remembers any of them. No one ever thinks about them. So if you can get a spike down, welcome it. If you get a chance, any chance to get along today, whether it's just pre or just when the statement drops, or if it's during the press conference, because it's going to run. We're really close to it. So you're just looking for any kind of a long that you can take here. And the conversation I had with Joe was, I was like, if it's today or if it's next week, we're gonna mark the low for the next 2 months. So you mortgage the house, you sell the kids, you sell the dogs, you sell everything, and you literally buy everything. Buy VOO, buy SPY, buy Qs, and you load the fucking selling puts to suckers for a print on the last day of September. You are never going to see that price again, or you might return to it one more time, but it wouldn't be it would be after printing major highs. You'd be closing those sold puts, and you'd be closing the longs you have likely on a um, god damn it. You'd likely be closing them on a dividend payment at quarter end. And the September dates you're looking for here is September 30th. It's a Wednesday. I don't like that Wednesday. It's not a Friday, but we'll take it. Take it as a Wednesday. That you want to be looking for that upside, that huge upside move into the end of September. Whether it prints in anytime in August or prints in any time in September, whatever that may be. Okay, so what else do I got here? I got one more thing to read to you from this article. And this is the one that I think this is the one that I agree with here. I can't find it. There was something about going on vacation, and I totally agree with the vacation trade. Nah, I don't know where it is. I'll try to find it for you and read it to you if I get a chance to. It was probably in another article that I had. Let me see if I can find it here. Hold on. Worst day for hedge funds since the COVID crash. Where is this article? I don't know why I can't find it now. I don't know where it is. I can't find it. I don't know where the fuck it is. It was the guy I was talking about, like the vacation trade here. I don't see it. Yeah, whatever. It was there. I think I read it to you guys yesterday. If I didn't, they were just saying the same thing. They were just saying everyone's going on vacation. You're going to be finding a bottom either today or this upcoming week. Okay, let's just watch this. There's nothing to do here. We're waiting now for just this rate decision up here. Where's the half hour here? This one right here. Remember, we get 12 p.m. and 12:30 flows in here. Let's watch these flows come in for 12:30. This year has been outstanding. I've made more money this year than I've made in many years. I saw that comment. This market this year has been outstanding. It's one of my best markets I've seen. It's been buy the dip, 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 buy the dip. It's been a fucking killer market. It's one of the best I've seen in years.
So furthermore, from the Ambry security company, no party had claim responsibility, no casualties, and damage to port infrastructure has been reported.
It's been like a trader's market. This whole like spring, summer, it's been trader's market all day long, every day. We drove all the way up into summertime, and then it's just been like back and forth. Summer trade. It's every summer we do this, like back and forth, sideways. It's been a killer. Everyone's saying going up, everybody's saying it's going to crash. It's just been buy the dip the whole fucking summer. It's been a killer fucking summer. Everyone was calling for crashes. When we drove up into this summer, there was calls for crashes, I remember. We just traded sideways all summer long. I gotta button my shirt up. I can't believe I'm sitting here with my button down. It's not a serious day. I'm over here fucking around. Trolling and shit posting with my shirt. Not wearing a black t-shirt. Move that over.
The Nasdaq 100 extends drop to 1.5%.
That's the 2% move in NDX. So you get the 1% now, and then you'd see a 2% move. If we get the next leg lower, you'd see it in NDX and IWM. There's a good dip buy here too if you want to buy a dip. I might have to buy this. Getting close here. I'm going to take a trade here in just a minute. Just trying to set it up. These calls are juiced still. Friday's calls are still juiced too. Fucking Friday 734s are $5.51. 42s are $2. It's almost the same price. Not almost, but fairly expensive here. 736. I'm long here. 736C for today. I'm reading the 1997 stuff right now. By March 1997, the inflation rate had fallen to 2.4%. The Fed became concerned that inflationary pressures were increasing and tightened monetary policy, raising the goal for the Fed funds interest rate to 5.5%. Inflation remained well below 2% through the rest of 1997, 1998. But then we got the Asian financial crisis in the fall of 1998. With low inflation, the Fed was concerned that economic recession in much of Asia and the slowing growth in Europe would reduce the growth in the U.S. So we started actually cutting rates. And that was the quick cutting cycle until we got into it was fascinating because we started cutting rates with the Asian financial crisis, but all that Asian money came into the US and we fucking cranked. Let's watch this here closely. Want to see something just like this here? Up here, down, start making our way up, down, way up. There's 12 p.m. right there. We're good now. It's good too. We're in fear right now. Well, I'm reading here in the background is about how retail's selling right now, and I'm like ready to load the fucking boat here, which I kind of find ironic. I'm gonna assume this is why most retailers lose. You should be loading the boat. I bought Tesla this week too. I might have to buy like SanDisk or something. They're almost ready to be bought. I've got the buy at 886.28, 886.22. Not quite ready yet to buy that. It's on its first level for me to buy, but Hang tight, guys. I'm getting a phone call. I gotta call you. I gotta put you on mute. I think this might be my doctor. Hello? Hey, Dr. Williams. Hang tight, guys, okay? Hold on, Dr. Williams, please, for one moment, please.
IRIB citing Israeli media say a US ship was damaged off the coast of Egypt, and reports suggest that the incident was the result of a drone attack. So, again, we have reported this earlier from Ambry as well as from two security sources. OpenAI CEO Altman discusses a new AI model with US lawmakers, expresses support for AI safety bills, and gives no details, though. CAN news citing Egyptian security officials who have denied the Al Hadath channel that there was an attack in the port of Damietta, claiming that it was a fire that broke out in the engine room of a decommissioned ship. So again, this is in conflict to the Ambry Security Company reports that a US-owned and operated LNG floating storage facility was struck by at least one UAV. So again, Egyptian security officials are denying this, claiming that it was a fire that broke out in the engine room of a decommissioned ship.
I'll be on here in just a. I got a couple things here, guys. I just got the phone with. I just got the phone with my doctor. I posted inside the Discord what the doctor said. I'm not gonna speak about it here in the show right now. We'll speak about it later or whatever. But I did post inside the Discord if you want to go in there and read what. That's it for pretty much verbatim what I got from the phone call. I'm sure there's going to be some paperwork that he's going to give me. I'll post the paperwork in the Discord if any of you have been through this. I'll post the paperwork so you can maybe give me some insight as to what it all actually means. But he gave me the top line answers. And yeah. The one issue is that I have to speak to my surgeon in the next at 1 p.m. in 12 minutes. I have to speak to my surgeon really quick, or the surgeon or whatever. It's like a friend of the doctor, my GP. So I have to speak to him at 1 p.m. So I'll be on the show today. Everything is good, by the way. If you're out there, I'm gonna live, unless I die in surgery or something. I'm gonna live. But outside of that, I'm gonna fucking live. And I don't know if it's ironic or whatever, but when my GP first saw it, I was like, "Are they gonna treat it or cut it out or whatever?" And he was like, "Cut that fucking thing out." And he just said it to me on the phone. He was like, "Cut it all out." He's like, "Just get in there and fucking start cutting." So, it's the best outcome I could possibly have gotten. The only big issue is that it's fucking huge. It's big. It's been growing for a very long time. But if you have a chance, I did post inside the Discord. When I get off the phone with the surgeon, should only be like 5 to 15 minutes. I just have some questions for them. Need to make sure that I don't need to go to like New York or to Chicago or anything like that. Make sure this can be done where I'm at. This guy's in my insurance, which is outstanding too. I just paid for a bunch of shit with cash because I couldn't get it done at the time that I wanted to get it done. So I was like,
keep in mind, I
was already starting to unload thousands of dollars. I've already spent thousands at this point. And I just spoke to my wife and children a few moments ago. I had to sit down with my wife and kids. So I spoke to my doctor. I spoke to my wife and children. I want to make sure that my kids hear it from their father and not from, it's kind of like playing telephone. And like kids should be kept in the loop from the person that it's going on with so that they have it from the horse's mouth, basically. Sometimes you'll get other people telling stories to kids and stuff, and you don't want that. You want to be, and the other reason too is because when you have children, you'll be dead one day, and your kids need to know about your medical history so that they say, hey, if you have a history of this or history of that, they're not out of the loop or it's not secondhand information. Like anybody that's older watching the show knows this, like how important it is to know what your parents' medical history is. Like when they say like you're only honest with your doctor and your attorney, you got to be honest with your kids if you have the chance, so that when they encounter these things, that they can say, "Hey, my dad went through this and went through that, and this is what he told me." Goddamn right. I still think I'm coming to New York. I think I'm moving to New York no matter what. So if you're out there and wondering if I'm coming to New York, I'm likely moving to New York City. This fucking train doesn't stop for anybody. They're going to have to fucking... Killing me is not going to be that fucking easy. The goddamn world's already tried to kill me. Tried to kill me in a fucking river. Tried to kill me in a house fire. Tried to fucking kill me in the army. Tried to fucking kill me in the ocean. There ain't nobody fucking killing me. So, yeah, you can continue to use and abuse me for years to come. I'm going to tell you guys, like, this past couple weeks, like, it's been the past 2 or 3 weeks, I was like, is this fucking thing going to turn into something where you guys watch me die, which I don't want to do. Or I want to do it when I'm old. I want to do it when I'm fucking old and you're old and we're sitting in a park somewhere in Florida or something. Let me just check my calls really quick. $2.21. They were $1.70 when I got them. we have to get out of them at some point, just so you know. We cannot hold those fucking calls into this. We can renegotiate for something cheaper. Like when we come up into this, I got to call this guy in the next 7 minutes, but if you don't think that we're rolling down today, if you're like, I can't tell you guys what to do. That's illegal. You guys have to have your own plan. You guys take all your own information. You guys execute your own plan. I know you guys watch videos at nighttime. You read papers, and you guys make your own decisions on how you trade. But my point here is, if you wanted like a hint, if we trade up here, and if we trade up here and it ends up becoming a squeeze, what you want to do is you want to get out of these calls. You do not want to be trading $2.50 calls on a fucking binary event where there's no edge. You guys know that we trade with edge, right? So we try to get the best position possible, best entry and exit, and be making money as soon as we're in the trade. So if your bias is to like an upside squeeze on this news, I would exit these fucking calls and I would get something really cheap, as cheap as you can get, 20 cents, something like that. You don't have to stay in them till they go in the money. You're just riding them for the duration of the trip. So if you have there's no intrinsic value to a zero date, and let's say we do a spike. If we do a spike, you just want to be like in the calls for like bam, and you're out. Get out. And even if we slam back down and then go higher, you want to, like in, out, in, out. Remember, your calls are only worth the direction it's going in when they're zero dates, and they're worthless after. So it's arbitrage, okay? And this is where you're like leveling. You can't really calculate this stuff. You can. Normally it's just like time and market. You'll figure it out. But just a note here that those are up $2.20 right now. So that's a 50 cents on a $1.70 call. So don't feel like you can't get out up here and then get something cheap. So you take the 50 cents you made and you can buy a 50-cent zero date. And if they burn, you're flat on the day at this point. Does that make sense to you? If you're trading with me right now, if some of you are following this trade, you got a free 50 cents. You can buy a 50-cent call. I think they're 742s or 55 cents. So now you're buying a 5-cent call at 742. Make sense? No, that's at this moment. It'll be different when you get there, or whenever you close these calls out. But and there's some other rules we got to talk about here before I call this guy. I got 4 minutes left. So just to prepare you, if you pick if you're trading directionally today and not an option seller, if you're trading directionally, just remember that any trade you take up or down, there's a couple rules. You want to make sure you're entering at the right moment. That means be more patient. The second thing I would say to you would be that they're directional, of course. You're in and you're out. If you're in the money, if you're making money. Now, let's say you pick the downside. Let's say you pick the upside and it blasts the downside. There's two more rules. These are important. First one is going to be, when you take this trade, you should be very clear with yourself that it's a gamble. There's no edge. Just be full frontal about that. You try to get that trade for cheap or free. This is an easy way for you to fund that trade. If that trade starts to burn, let's say you pick the wrong direction, you should stay in the trade. Okay, even if it goes to zero. Let's say it goes like 50 cents to 35 cents or whatever. Don't add to it, just stay on it. And you have to be aware that it could go to zero. And if you're already aware that it's going to go to zero and they're already torching you, you might get another slingshot up to get out. Let's say you pick, or let's say down. Let's say we'll just look at it like this. So let's say you're picking the downside, and we go up here and we start doing this, and your puts start burning. They might still whipsaw you down, and you can at least get out and keep some money, or it's down here. Does that make any sense? So don't panic sell a position if you're upside down wrong, either direction. The next thing is you need to be putting upside stops or downside stops for a print. Take your money and run. So let's say you buy a call or a put. Say it's 50 cents. No, you just say, I'm getting out at $1. Don't hand wring over it going to $2 or $3. I should have stayed. I should have, could have, would have. Hindsight trading. Just like, hey, I made $1. Awesome. It's 100% trade. I'm out. Or you pick $3. So that would be setting an upside or downside stop. If you can't set an upside or downside stop, make sure that you're trying to close these things with a market sell, not a limit sell. It's a market sell. Bam. This is the most liquid symbol in the entire stock market. Nothing's more liquid. So you're going to get good fills for market as well. But you don't want to be like buying a call 50 cents, let's say, as an example, not in this particular place that we are. You want to be predetermining in your brain, at least, even if you're not setting a physical stop. Like I want to limit sell at $1, right? Low fill likelihood or whatever, right? At least in your mind, say I'm going to sell at $1 and hit that market sell when you're comfortable, or reassess in your mind as quickly as possibly can. Now trading $2.33 on a $1.70 trade. I think it was bounced around like $1.72, $1.70, $1.76, $1.70. I think it even went down a little bit over here. It might have even been cheaper over here.
A senior official from one of the mediating nations says that the one making the decisions is the commander of the Revolutionary Guards of Iran.
So you can fund yourself a 0-day trade in here if you took the trade with me, up or down, at 2 p.m. All right, I'm going to get out. No, I have to take this phone call at 1 p.m. Now, this is my general practitioner telling me this information. I don't know if the surgeon's going to tell me something different or weird or more negative or something like that. This is the information that I have at the moment, so I just want you to be aware of what I have for information. And I want to say one last thing to you out there. If you're a fucking dude, go to the goddamn doctor. And when they don't tell you what you want to hear if something's going on, I want to tell you in my circumstances, I allowed that to happen. When they told me nothing was wrong with me, they told me that for 2 fucking years. I had to literally, I don't want to say this publicly, but I had to beg to have them do a digital, basically stick their finger in my butt again. And I went in for something else that was impacting this thing that was going on with me, was making it stand out. I had to ask the doctor again, can you please stick your finger in my ass? Do butt stuff with me. And when he did this the last time to me, I hunched and started pushing out like I was going to take a shit. I didn't want to do that. It's gross even thinking about that. That was the only way that he felt it on me. It's the only way that he fucking felt it in my ass. So, and I wasn't eligible for, in my health plan, I wasn't eligible for a colonoscopy. So they've been looking at this for a couple of years now. And I want to tell you, if you're a man out there, like, don't fucking ever be afraid of the butt stuff or the gay thing and any of that kind of shit. Like, you have to, like, I don't know what it's called, but it's like, there are moments with doctors where you have to take your own agency and demand. Like, literally, I don't care if you're yelling, screaming, if you're just like telling people, fuck you, do this for me, pay cash, whatever you need to do. I paid cash too to get some of this stuff done, like some of these testing done. You have to do that. No one, I want to tell you something, man out there. Earmuffs if you're a woman, or if you're a dude that likes dudes or something, or a woman that likes women or whatever. I'm going to tell you something as a man. Nobody gives a fuck about you. More than likely, you're going to die alone. You don't know what the reaction from people is going to be when you get sick. You don't know if people are ever going to be there to help you. At some point, you have to stand up for yourself, and make sure that you are taking care of yourself. Okay? I'll leave you with that right now. I should have stayed in those calls. They're now trading 47 cents. We'll take a peek here at this high right here. if you want to know where to get out, if you want to take it to the max here, it's right here, or the first bus stop is right here. This is the first bus stop. You have to be an advocate for yourselves. I got to tell you guys, the last 2 weeks I've been fucking pissed. I've been so angry. I got told no at every fucking corner. I get fucking told no, my insurance for this and no for that. This person's not on your fucking network, so you got to deal with this other guy. And I'm like, fuck you. This is the best guy over here, so I got to pay cash. I got fucking speaking to fucking AI bullshit. I'm speaking to fucking, no offense to Indians out there, but like in Bangladeshis, but I'm speaking to like an Indian or a Bangladeshi guy when I want to speak to a fucking human in my own country, you know? And it's not, I'm not trying to be like offensive about that or whatever, but I just like, you know, like it's been nothing but fucking problems trying to deal with this past couple weeks. And it's very, it fucks with you, the psychology, it like fucks with your psychology. Like, am I doing this wrong? Or, you know, like, should I just accept this? You know, that kind of stuff, you know? And then the timelines and all that other kind of shit. Like, once they found it, my GP is like, you need to be fast with this. He's like, you need to do this, like, right fucking now. Like, you need to do this. And then he would call me again and be like, oh, now I want you to do this. Now I want you to do that. And you're not always going to get the insurance side that's going to tell you yes to it. You know, it's like an elective thing or, you know, whatever the fuck it is. So, you got to take care of your shit. Next target is the blue line right here and this line right here, if you're still on board. Those calls are now printing $2.91. I'm not in them. I got out at 40. But they're trading $2.90, full dollar. You can buy a dollar call now. 741 Cs are 96 cents. You can bow out here. You have a free trade to gamble. For the rest of today, you could wind up, the worst you're going to wind up today is flat. You won't even wind up red on the day if you follow me on that trade. Yeah, I gave my predictions already this morning on the if you want to rewind the show, I laid out my predictions for the day. If you want my personal opinion on today, I think we green bar up into the bell, but I can't say we're not going to swing low one more time. I am looking for one more low to get into another call. So if I can catch one more downstroke here, anywhere between now, I want to say that it would come during the press conference. If there's a low to grab, it should be during the press conference. Now I could be wrong. It starts squeezing up. We missed the trade or whatever. But I do think that we are looking for at least one more low, even if it's something where we spike up. You know, you get like no hike, and then slam straight back down again over here, or like a fade down into him. That's the one that I want to buy. Something down here. You can actually see it down here too. And if it's like, you know, we get a rate hike and he's super hawkish in here, I'll look even lower down here on that weekly low.
Just a heads up, U.S. Secretary Wright's currently speaking live now,
which is way down here. You know, so if it's something like this where it's like no hike, then they like slow fade us down to this one over here for Jerome, for Warsh, and Warsh starts getting hawkish. I'm not going to buy it. You know, maybe it's another spike up here and then down, and I'll try to buy this one to go up. If it's no hike in the statement, I'll read the statement as fast as I possibly can. And if I'm reading the statement and I'm like, fuck no, this guy's going to be super dove, I'll buy this right here. We'll do it together. I just told you this trade over here, right? Told you that trade right there. And I'll tell you the next trade if there is one. We do fairly well here. If you recall, some of you guys know this. I do very well on these days. Even the last, I rarely miss these days, like rarely miss trading these days well. As a matter of fact, the last FOMC, I was bearish. I took puts on the open. I wrote it all the way the fuck down. The only thing I missed was the last stroke into the close. Had I held, I would have been fucking rich. I did close, and there was a big stroke down. I caught that whole thing. I closed almost near perfect. It squoze one more time.
So we have posted out the
I'll just
video
show it to you.
of Bloomberg TV on the feed for you to watch. Chris, Secretary Wright. Chris Wright, the NG Secretary.
We can actually look at it right now.
Apologies, we'll get the right one out.
I don't know, it was the FOMC or the Senate, maybe. Maybe it was the Senate hearing.
It says there's no reason for US debt to be downgraded.
Was it the 16th, 17th or something? Was it the 10th, maybe?
And in the long run, the budget is moving in the right direction.
I was going to show you the day how it went, but there was like we did something like this. It was on I think it was the Senate hearing. We did like a spike down, like whammo. I took all that money, and then there was like one more up, like way up here, and then it slammed down. I missed the second one. And had I stayed in the trade, my puts probably wouldn't have printed. Like my puts would have been like mega in the money, losing money, then mega in the money over here. So I took the money. I didn't take this last trade down here. I was done for the day. I made a bunch of money. And I'm looking for something similar here, where I made money for a free trade for a gamble. So my wife's calling the doctor right now. I'm going to speak to them. I got to get off here for just a minute here. Target hit right here. And I'll be right back, guys. Thank you for your patience the past 2 weeks. Might have been 3, right? It's when I got back from Atlanta is when I started feeling really sick. Whenever the fuck that was. The 4th of July, right? And it has been a month. I say 2 weeks. So I got back here.
And NG Secretary Wright.
I want to say I got back on the 5th or 6th. So it's been 22 days of nightmare till today. 22 days of fucking pure goddamn. First time in my life. First fucking time in my life that I've had pure nightmare fuel for 20-something days. It's been nothing but a nightmare. It's been the biggest nightmare I think I've ever had in my entire life. I'm trying to think if there's anything in my life that's been this much nightmare fuel. House fire is the closest thing. Biggest nightmare though I've ever had in my entire life. It's my mortality, and it's my facing mortality, and then my kids, my wife. If it's that bad, how bad is it? So I'll be back with you guys in just a few minutes.
Asset says we expect downward pressure on prices.
You guys want me to draw it in? I can draw it in if you want. Ready? What I think's gonna happen, I'll draw it in. Something like this. Just like that. Something like this. You're gonna fade this line right here. Like what should happen is like you're either popping this and then just slow fading this. Right? Sweep all this stuff down here. Or you can get a pop up and like slow fade, no hike, no hike, no hike. Slam us right back down for the presser and the digestion of what's going to happen. And if it's if the thing is bad, we'll go down to the downside. If not, we're going to go up. So there you go. That should keep you busy until we get closer to 2 p.m. And I will have the press conference on as well at 2:30. I'll be right back, guys. Just a minute here.
That concludes comments from Hassett on CNBC. Energy Secretary Wright says 13 million barrels a day of oil are leaving the Gulf region over the past week. So again, 13 million barrels a day of oil are leaving the Gulf region over the past week. According to Tasnim News, citing Syrian sources, reported that Israeli army launched an artillery attack on the area around the town of Abdin in Yarmouk Basin region near the province of Dara. Again, according to Tasnim News, Syrian sources reported that the Israeli army launched an artillery attack on the area around the town of Abdin in Yarmouk Basin region near the province of Dara. Energy Secretary Wright, in regards to the 30 million barrels of oil leaving Gulf region over the past week, he says half of that oil is flowing through pipelines. And SPI is a long way from operational minimum.
Jesus, those fucking calls are now trading $3.64.
Woo!
I'm a happy guy.
Energy Secretary Wright says the US military is escorting oil and gas through the strait. 5 minutes ago now to begin the Bank of Canada meeting minutes. That concludes comments from Energy Secretary Wright.
All right, so just a matter of watching at this big A right here. We just have to hold this big A. Could be held right here. We just want to hold this. So this is, I want to show you this here. This is the prior high. So here's your prior high right here. We mark the low. We were able to break above that high, right? So I beat that high right there. So the only thing we have to do is hold at least this right here. But we don't necessarily need to go this deep. So there's your A. Right there. It could be here. It could be here. But let's say we do halfway. This is the halfback trade right here. You'd be expecting to then take out this next one, which is right here. Right, so like smash up into this one. They might auto reject you to kill the calls again, and then we'd be fighting against this drop right here. It's kind of wonky how it looks right now, but because of the volatility, basically the thesis here would be you do this one, you hold this A at let's say worst case scenario. Your next target would be this one right here. You'd want to see if we can peek our head above. If we can, we just need to hold the next A over here. Actually, this one right here. And then you get 1, 2, and 3, right? So 1, 2, 3. Now the 4, 5 to the bell over here, I can't tell if we're going to get that or not, but I did draw it in. If you did a 5 waiver, if there was a 5 waiver, it'd be 1, right? 2 right here. And then 3 up here to this top one right here. And I just don't know if we can like scrape all this up to the 78 or not. And basically you're closing all of the gap up here for your last wave. You see got a PT1 right here to close this gap. Daily triggers here as well. And then you've got a PT2 up here of 746, but it could be 748.77 if we go up. Sorry, I'll take the thing off here. This would be a PT3, but I don't know if you're going to get above this. We can draw it in though. And a note here that
10 seconds.
I want you to a note here that if we go up.
Bank of Canada's ahead of the Bank of Canada July 15th rate statement says some governing council members were split over sustainability of rebounds.
Like it,
Also, potential risks to growth include failure of businesses to continue to adapt to tariffs.
Voice news disconnect.
none of that matters to this market. Nothing that guy's saying now. Just turn that asshole off. So the point that I'm trying to make to you is that if you go back, I posted some handy dandy charts yesterday. In a lot of the examples, a lot of them, we couldn't unwind until post month end. No unclenched till post month end. Like bad downside kind of stuff. And in many of the occurrences, we went vertical. Like vertical after month end. Like we go vertical, 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 vertical. So like Friday putting out a huge high, maybe 760 on Friday at 4 p.m. like right, or 6 p.m. Just after the options market closes, or even some continuation into August OPEX to the upside. Now we don't know what's going to happen here too. We don't know if it's going to be hawkish Fed with no cut. We don't know if it's going to be our next week no cut, hawkish Fed with no hike, or if it's going to be 25 BPS. Don't get too carried away with a 25 BPS, because if they blood it and he comes out and he's extremely he's like Bernanke basically in that March 25th, 1997. That day that happened, the market just literally went from the bottom and it literally went straight vertical up. And Bernanke said that. So just be nimble over the next coming. Be nimble today. Take the money, look for a dip to buy. You know that we're going to hit. Like the dealers are going to try to murder your options today. So even if you hit a high, they're going to try to send it straight back down to the depths of hell. You can. So if you're like, I'm going to buy a dip or something like that, you almost always get at least one good dip to buy. Also note that you have the half an hour trigger. This is underneath the daily trigger. It's very bearish. We're not above the hourly trigger right now. The half hour trigger is telling you that, and this is where the sellers are, just so you know. Sorry, I got a lot of stuff going through my head at the same time. Like I got remember that you have like your young Jim Bros are right here in the 30 minutes, and your big Jim Bros are up here at 7:43:59. This is where they are, right here and right here. And remember, we need new information to get above either of these guys. Positive. If you want to know what I think's going to happen, someone was asking earlier, like, what do I think happens? I don't know if they were asking about price action or if they were asking about what I think is going to take place at the Fed meeting. I think you're getting a 25 basis point hike. It's the way to do it. If you want my personal take on it, we should take the hike, and he needs to address and say this is not a hiking cycle. He needs to do what Bernanke did. It extends our bull market significantly. If you just look, it's very easy to see this stuff. If you just go back to like 1997, right? Like you don't want to, like you're either taking a hike or two this year to extend a bull market for many years, or you are definitely, without a doubt, setting up a hiking cycle within the middle of this bubble. So that would mean that you would see something, a mini or a full size, something like 2022, something comparable to it. And you really don't want to see that. What you really want to see is you want to see like a hike or two, and then if anything bad comes, we cut. It's just like the 1990s. I'm kidding you not. And you want to see the extension of this bubble at least for 2 years, maybe 3. We're at a new bull. Like every time we go down, and like the last 2 springs, we're like triggering new bull markets every time we do that. So we'll still have some of that along the way, but it keeps the bubble alive. It keeps the bull run alive. And I know that everybody's short-sighted. They just like, I want to cut or I don't want any hikes. But it's so short-sighted. For most traders, for most of you guys out there, like 70% of you, you should welcome a hike. You don't want to go through a hiking cycle. It's brutal. It sucks really bad. And like crashes are not hiking cycles. Like a crash is not a bear market. When we go to a hiking cycle, it's a bear market. You want to go into like a crash is nothing. Like you can see them a mile away when they come. We saw the last two springs. We saw both of them. So like when we're doing that to just relieve the pressure on velocity, so we can get some more velocity in. Those aren't so bad to go through. It's a month and a half, 2 months of down. It's anywhere from like 4 weeks to 6 weeks. We're not talking about 9 fucking months of just down, down, down. And that washes people out. Like when you go to a bear, like the 2022 bear market, I had friends that like they gave it all back. It's famous. I had a famous guy on FinTwit with like 2 million followers. Like DM'd me one night. He thought I was calling him out, and I was like, I'm not calling you out. But him and I had a long conversation. He's a well-respected trader. He was like, it cleaned me out. So bear markets are no fun for bulls, and that's most of us, right? Most people are bulls. So I think we need the 25 basis point hike, and I think we need today him to follow the Bernanke playbook for in the presser to be like, we ain't hiking. This ain't no hiking cycle, and he should be shutting down all the reporters. Just shit all over him. And I think you can, or the street is trying to say that the hike with a hawkish tone is like finally breaking away from. He doesn't need to do that. I think he'll get a pass on making friends at the Fed and getting everybody on his side. I think just looking at the data itself, I would not take a hike today as hawkish. I wouldn't take it as hawkish at all. I would say that he's trying to maintain prices and he's trying to maintain the market. And I think this fulfills what Trump needs to get through the midterms. So I'm on hike 25 basis points today. I wish that I knew that, or I kind of knew they wouldn't do it the first meeting, but I wish they had done it the first meeting. They made that known, and I think I wish he had been more forthcoming in the Senate hearings. But you could tell that nobody wanted to hear it. Like even if they know the data, then no one's willing to discuss it. So if they do that today, where they don't want to discuss it, that's fine. If they like threw a hike on and they're just like, it's not a hiking cycle, stop this shit. I think that's the best outcome for the market. Period. And I think if it's spun well, it'll like I didn't mind the conversation that he had at the Senate hearing. Like I didn't mind that. I didn't mind the no hike at the last meeting. But what I did mind was that he didn't confront it, or at least make it known. The data is not good. The data is pointing towards inflation running out of control. We just can't have it. We can't like in 2 or 3 months start we start printing 4.8% year over year inflation rate. That's going to trigger a fucking hiking cycle. That's what it'll trigger. We're like 2 prints away from that, and we're going to print that shit. So a hike or two, I think is going to help extend this market. And I understand all the interplay, like stretch it as long as you can and all that kind of shit. But I do think that the bond market would react negatively to it too. I don't like the idea of I think the bond market wants it as well. I think the stock market, we're pricing in a hike today, or this whole past couple weeks here. So might as well just throw the log in the fire for the pricing in of that hike. Yeah, I'll show it to you guys right now. So like, I'll show you guys this right now. So, see you guys saying Sims. It's not 709. Right now, there's an imbalance in price between SPX and SPY. I'll show it to you again right now. So I want to explain to you guys that. Hold on here. Like for all the doom and gloom and all that kind of stuff. And I'm reading articles today saying that retail is selling. Retail should be buying like in and around here. Even a SanDisk, I have it marked to be buying this level. I'm not going to buy it. I have one more level down I want to go, but you should be buyers here. Like we're like in and around here, like today, next week, something like that, because we're so close to the bottom. So this is. I'll show this again. So I track the JPM collar. I've been tracking it now for years and years and years and years and years and years. So what the JPM collar is a bearish seagull, and the intent behind a bearish seagull, and it's not just JPM, it's not the largest trade in the market, but it gets followed by everybody else. So now it is a large trade. And there's two trades. There's the first one for the start of the quarter, and there's the second one after the first month. Now, the longer we stay within a quarter, so the intent behind this is this collar is it stops upside volatility and it stops downside volatility. And if you're a professional like JPM and you're selling a product to you and I, you don't want to have like 1 or 2 great month returns and then have like 9 months of bad returns and a flat month. So what the street wants is, consistent, decent returns. If we're in a bull market, consistent, decent returns, even in a bear market, consistent returns, and then maybe 1 or 2 off months, like a month of flat, and then 2 months they're down. And your financial guy says to you, "Don't worry, I shorted it and I made you some money," even in those 2 down months. But they want like consistency in the market, and that's the intent behind this. And there are better hedging strategies than this collar. But this is what they use to this day. And what I want to say to you is that when you have the top strike on a collar and a bottom strike and a middle strike and a collar and the bottom strike and a collar, right? It is very difficult to get underneath the middle strike. It acts as a magnet, and then it acts as a repellent. Okay. Now, if you wanted to get underneath, say this level, this exact one right here, you could potentially get under it just after the first of the next quarter, not the month, the quarter. So we get very wound up into these quarters to the end where nothing could stop the price going where it's going to go, even a nuclear war. Like at an end of a quarter, you're not going to stop. And I've talked about this month, like how you check every month, like where we get unwinds is on expiration OPEX month end, right? So you need price to be you need price out of trend, right? Like out of trend, right? Like far enough out of trend at the end of a quarter, right? And then once you get to that new quarter, you can get underneath briefly. And then it goes back up and then you're like trading down here or something, okay? You could do something like that. But just let me show you this historically. Why this stuff matters is because it's like all the time in here. Even in here, you can see this is actually a good one. So we get underneath finally this one right here. And yeah, we're able to go down here, but it's in a new quarter. So the middle strike on the middle strike here for this quarter is 7090. Make sense? And if you go to when we come down and see how we come down into these middle strikes. I don't know why this one's missing right here, but let me just try to show you well, the reason why I'm bringing this up is because you don't typically slam into the middle one. It's like we didn't slam into this one. This one we did slam into it, but way before the close. We ended up squeezing up to the end of the month. We typically don't see how we typically don't actually hit. See right here, I couldn't get in here in this one. So my point to you is anything down here, like if we can get down into the 20s, like 7,200 today, anything like that, anything like this today, like if let's say they blood us down here, that's indubitably so close in here to the actual physical bottom possible for the quarter, the next 2 months, that it ain't going to matter what you do down here, because 2 months later, you are going to be, at some point within 2 months, here's the 31st, whether that's the bottom or this is the bottom here, you are going to trade that 780.90 by the end of the quarter. You're going to trade that. There is no situation where you go underneath here, start blasting down here. It would need to be like an invasion of Iran, maybe. You can't trade that. You can't trade like an invasion of Iran and a nuclear bomb going off on August 2nd. There's just no such thing. So that's like trading a nuclear war. I'm short because of the nuclear war. I've been short since 1989. Can't do that shit. For most circumstances, under most circumstances, right, we have to look at what event could send us down there. And there's only two. There is today, because it's such a large binary event. And number two would be the first week of the next month. But you got to remember that you still need, you would need Warsh to be like 50 BPS, and we're starting a rate hike cycle to trigger this, to trigger all this down move. And then you would need like an Iran war with a nuclear bomb going off to get down here, and then all this other fucking nonsense. So we're closer than this looks. The 730 is. This is the 730, basically, and this is the 720. It's like anything in here, if you're given the opportunity today on a binary event, or you're given the opportunity, let's say you get the binary event, bad, and you get like super hawk Warsh, it doesn't matter. On this first week, it's still going to moon, like literally moon. It's going to moon. So you get your all-time high up here. So you're closer to a bottom than you are a top. Does that make sense? So if you're a bull, you're using anything you can to get long into September 30th. If that makes any sense to you. And you sell fucking calls. You buy fucking VOO, buy fucking SPY, buy Qs, whatever you want to buy. And you literally sell shit tons of puts for like September 30th to suckers. And there's no way that we're getting underneath this thing. Just so you know. There's just no way it ain't happening. I don't know if that makes any sense to you out there or not. So theoretically you could get long here, and it ain't gonna matter. You're never gonna think about this again. I want you to think today, does anybody consider or think about the Senate hearing? Anybody think about the volatility in the last rate meeting in June? We had a rate meeting in June and a Senate hearing. Nobody thinks about it. Nobody's going back and saying, remember that low right there? So you look back on that and all you see is the green bars. Like green. So on a binary event, if it can lend you the opportunity to get that volatility, you take it. It's the same as like an NFP print, same as like a CPI print, where you don't even, do you guys even look back on NFP prints? No, but it's like moments where pre-market you have a chance to like scoop up something on a fucking super low. It doesn't even show up in a fucking stock chart, or it shows up as a wick. And you guys only look at candles. Nobody looks at anything but the candle, not the wick. So think of it as an opportunity. We're coming in close now. It's 13:48. We got 12 minutes until we get the decision. He wants to be thinking about. So I'll put some of this up so we can actually see it, see the reaction to this. At 2:30, I will have the live presser on the screen for you to view and listen to for a reaction. I'll be listening to everything that's said. I want you guys to know out there that like I devour this information. So whenever they speak, any words that come out of their mouth, I already know what they mean or what they're trying not to say or any of that kind of stuff, like any kind of shenanigans. Like I read all this shit. Like I read all the data, all of it. Like from the charts, even download it now. So I'm fairly good at this these days. I think I got to move on to something new because I used to be okay at data, but not great. And I've become much better at it. So we'll listen closely to Warsh today and what signals he's actually signaling. you want to be paying very close attention to the questions that are asked, like who's playing ball, who's not. Pay very close attention to like, are the journalists more aggressive? They weren't aggressive the last time. You want to see if they're like holding them to the iron, if they're going to get some answers out of them, that kind of stuff. I'm going to read something here to you. This is about inflation. I'm going to read, this is from Wolf Richter. If you don't have a chance, if you want to know a lot about data, I've read, I whittled it down to like three guys, including Wolf, was 3 different sources. I just read Wolf now. I don't even bother anymore with the other 2 guys. If you don't know a lot about data and like what it really means and what the real reactions will be and that kind of stuff, he's the only guy I think that is worth consuming. Because even if the great part about this guy is that when you start reading about this, when you start reading the shit this guy lays out, you can then look through a lens at what other people are telling you and decipher what they're trying to do. That's price action in the stock market. Okay, so you're like, oh, this is bullshit. This is bullshit. They have a trade on, and they're telling you that they want this to print, even though the data is not in agreement with this shit they're spewing right now. And you would be shocked at how frequent it is. You'd be shocked at how trusted the sources are for the regurgitated data, and how badly they have it actually wrong. So we've got. I'm going to read this quickly to you because it just came out recently. How massive AI data center investment pushes the economy and prices, and see durable good orders. This article I think just came out. Now I already know about this that this is going on, but I talked about it with you. I think yesterday, the day before, or Monday, or something, where I told you that there's inflation inside of this economy. There's inflation inside this economy that is not just greed. Like there's the greed aspect, then there's like, and everybody's pointing at the wrong shit. They're like pointing at oil and gas and war and all this other fucking nonsense. Everything but what the actual inflation is. And there's a reason for that too. If they discussed or acknowledged this, there would be calls for a hiking cycle. Okay, and I'm on board with the run it hot and run it a bubble and all that kind of shit. So they can't really discuss this stuff publicly, or make it the focal point until they're ready to start a hiking cycle. But one of the real true sources of inflation right now is not fucking tariffs. It's not fucking Iran. It's not fucking oil and gas. It's like greed, and there's a little bit now coming in from tariffs, but it's greed basically, and it's the Fed and the Treasury Department doing like stealth QE. They're going to say it's not stealth QE, but it is. And it's also this right here. This is another important part, which is data centers. Not just data centers. It's factory buildouts, it's machinery buildouts for factories, it's data centers, it's the power for the data centers, it's the AI companies themselves. And what's happening is there's money the sideline money, it's coming into the market. If you don't think that it is, or you're like, I don't see it. If you went through Schwab and got into SpaceX, that's the same money. So people are like, I'm going to buy this. I got enough wealth, and my wealth advisor is telling me he can get me into this IPO or that IPO. So it's everywhere. And it's not just that; it can simplify it for you. So if I'm an electrician and I normally make $30 an hour or $60 an hour, I can probably go work for a data center build out and make 120, 180 per hour. So now I got all this money sloshing around in my pocket. And you got to remember that inflation is a weird thing. Like, everybody hates inflation. Everybody. Every president blames the prior president. Every fucking president runs on it. Every single one. And people will complain about inflation. They'll scream, yell, and scream about it. What they won't tell you is that they make enough money to pay that inflation. And the truth is that the companies know this, the government know this, that they have the money, and they're just bitching and whining. The data shows that people are wealthy right now. It might be a K-shaped economy as well, where the bottom 15% is really, really bad off. But the other people that have the money are actually spending it. The money hasn't slowed down, it's moving. And it's starting to come out of people's savings and pockets for this build out. That's coming out of people's pockets from the jobs that they take inside of this economy, building this stuff out. And so this money is like sloshing around inside of our economy right now. Nobody wants to talk about it. There's like, what do you hear right now? All you hear right now is credit risk, private credit risk, questions on is there enough money for the rest of AI, all that kind of shit. So, and that's not what's happening. It's actually the direct opposite. What's really happening is the money is coming off the fucking sidelines. And that is one of the drivers of inflation right now. And the data speaks to it. So let's wait and watch this right now. I'm going to read this to you as we wait. We've got 4 minutes left. I'm just going to quickly read this to you. Orders for computer and electronic products, electrical equipment and components, machinery included, power generation equipment, fabricated metals, products, and core capital goods all surged. Durable goods going through the fucking moon right now. That means we're going to need people to build that stuff. That means we need people to buy that stuff, right? Total orders for durable goods received by manufacturers in the U.S., including aircraft and defense, ticked up by 0.3% seasonally adjusted in June and May. Year over year, not seasonally adjusted, total orders jumped by 8.9%. And you also, I should have brought that up too, which is the defense spending that we have is through the fucking moon, right? They're asking for even bigger defense spending right now for this coming AI fucking war that we're in. This one right here. We got this one down here, daily low. $8.9%. That is insane year over year. That is insane. Like literally insano. That is a fucking booming economy. Okay. The 3-month seasonally adjusted, which irons out some of the month-to-month squiggles, spiked to 1.4% in June. So the economy is killing it even right now. For Maine was up 6.9% year over year. But this also includes orders for aircraft and defense. When Boeing receives an order for 113 jet aircraft in 1 month, as it did in June, which will be reflected in durable goods orders over the next months, it pushes up durable good orders by billions of dollars. Billions. That means people are getting paid, right? People have money to spend. And people are bitching about inflation, but yet they have the money to spend. All right, so I'm going to take this off right here. We'll come back to this. I'm going to turn back on our favorite bear over here. And we're going to await the decision. And I'm going to read in the background. I'm going to read the actual statement and quickly read through it and see if there's anything we have to be very careful of. And hopefully we can get this information faster than it hits the tape. In the chat, post really quick. We've got 2 minutes. Post in the chat. Do you think we're getting no hike, bullish hike, or hawkish hike, dovish hike, dovish no hike, 25 BPS, nothing? Type whatever you think is going to come out in the next 2 minutes. Let's see who's right and who's wrong. And I don't mind saying I think we're going to get 25 and a dovish Fed. That's what I think.
1 minute remaining. I'll lead with
And I could be wrong.
Interest rate decision.
We got somebody saying cut. Fuck yeah, you're going 1%. Hell yeah, brother. No hike, no hike, no hike, no guide. I'm on the no guide. I don't think you're getting a guide either. I'm with you on that one, Oda. How about hawkish Warsh or dovish Warsh? Hawkish, no hike. That's the most probable outcome. Hawkish, no hike. No change. That was buy it, trade it. T-Rent Tent saying hockey. Jar Life saying no hike, no guide. Bork, cut would be fun.
10 seconds.
Take your Main Street hat off, Borky Bork. It's a 125 basis point cut. Holy shit. We're running it at 10% inflation right now.
No change. Rate remains
Whammo.
unchanged at 3.75%.
There's your target up.
It's 9 to 3 to hold the benchmark rate unchanged. Fed's Hammack, Kashkari, and Logan dissent in favor of a rate hike at this meeting.
Take the money and run.
Its statement here.
Take the money and run. Take the money and run. Back test. Slam up.
That economic activity is expanding at a solid pace, and repeats that inflation remains elevated in part due to shocks. So we're looking to the markets here. Some strength in the S&P 500, weakness in the dollar, as this time there is only 3 dissenting votes looking for a rate hike at this meeting. Again, that being Hammack, Kashkari, and Logan, but the rate overall remaining unchanged.
I'm looking for the actual things to be said right now. And all we have to deal with here is do we get the hawkish or the dovish Fed chair? We'll know that at 2:30.
After the Fed leaves rates unchanged.
Trading the hourly trigger right now, trading 739.33.
Israeli forces are advancing towards Al Raqad Valley in Syrian territory.
This one right here now becomes right here. We're going to now trade trend. This is trend right here.
Spot gold jumps more than 1% following the US Fed decision. Last up around 1.2%.
Remember, we have targets above, PT1, PT2 for the close. I think we have a PT3 up here I wrote in. Yep, one more right there. Remember, we still have to deal with Fed Chair Warsh, and is he hawkish or is he
unchanged? The S&P last
dovish?
0.18%.
You don't need to see these anymore. The 2 white lines implies we're going higher. The door is open to go higher now. Remember, though, this is still a binary event. There's a 4-hour. There's another 4-hour. Here's a daily.
So to the markets, the dollar and bond yields did see some weakness following the Fed rate decision there. S&P 500 saw some strength coming through.
We're not done yet here. If we get the hawkish Fed, we're going to go down 50 BPS. So on SPX. We still have to find out from the Fed chair what he's going to do. Is he going to do a stern talking to? Is he going to be dovish and say, this is all transitory? Also, remember that if we get a dovish Fed, you could see a reaction post the 3rd of August where we go back down. Bond market freaks out. We're able to unwind and see some real negativity. Not today, not like big negativity, but negativity on like the 3rd. Once we're out of the, once we unwind the month. And a couple of those scenarios I showed you, we went vertical into the 1st of the month. And then we started rolling over. We put a high in and started rolling down. Once we're able to unclench. Just be patient here. See that? You want to snip that, you can. We're going to bring this a little bit closer here. There's one right here. There's one more right in here. We want to, if you're a bull, you want to be holding this right here. This one down here. This is the downtrend. We want to turn this into an uptrend, turn that frown upside down. This is the first rejection. We want to get above it.
A September rate hike.
I missed what he said about that September rate hike. I don't know what he meant than that. Maybe he's talking about the 3 or 6 month or a future rate or something. Hold on here. Be careful of something in here, Kay. So you could be putting in the high up here and then something like this. I'll draw it like this for you. And then that's where you get the uppies right there. And one other thing, I should have said this. This can come anywhere from here until about 3:30. Okay, so this it might not be at 2:30. It could be like dicking around in here, dicking around, and then all of a sudden a reporter says something fucking stupid, and it's wham, wham, wham. So just be down here waiting for the buy. Be patient. This is the place to be patient. Be patient again. It's somewhere over here. If we're going to go up into the bell, it's somewhere over here. It ain't going to be right when the presser starts. It'll be like first 15, 20 minutes or so. I'm getting so goddamn good at these fucking days, aren't I? Whew. Hot sauce, baby. Getting old. Hold on here, guys. I guess I should pop the Popeye collar. 736s on a high. We're trading like $4. That's the second chance to get a print on that strike today. This is weird. There it is right there. All right, I got it. La 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 la. Sorry, I gotta do that so that I don't get pinched for music. Let me see if I can bring this up. I really want to watch this on the Federal Reserve website. I think. I can't tell if this is their. I think this is their player. Hold on here, guys. YouTube. Where is it? Why is it not showing? Hearing entitled. That's weird. Hold on here, guys. I guess this link is dead. Here. Window capture. News source. There it is, right? Is that it? Right. Sweet. Done. Sorry about this. Give me one quick second here, guys. Oh. Sorry for this. I'm having technical issues here. Had this set up and it all right. We can probably move this, probably make this a little bit smaller. Hopefully it doesn't move too much like who's the guy that moves a lot? It's like one of those guys from the White House. He does this. He's like constantly rocking back and forth. I forget his name right now. So there it is right there. And we put him right here. Hold on. We'll do it like that. No, I don't know. Hold on. Let's put him over here. I don't know if I like it over there. I gotta figure this out. I gotta do a different layout. I hate how this looks. We'll leave it right here for now. This is live right now. Or should I do it? Maybe should I just do it on YouTube? Maybe. We'll watch it on this one here. I think this is their player, so I think this is the most real time we can get. I'm assuming that this gets piped to YouTube, so this might be like a second faster with no native delay. Just be patient in here. They're going to eat all your money. They're going to take this whole trade away from you. Dealers are. They're going to take this whole entire trade away from you. The name of the game here is to like charge you too much, catch you off guard, take all your money away, sweep up, vacuum it up, and then we actually get the bigger move later. Just be patient in here. Don't do anything. Remember, if you get a hawkish Fed, we're going to blast the downside. So that downside target, if we get the hawkish Fed, 726.35 into the close. I'll leave this over here for 1600. Don't forget it, okay? 726 into the bell. If your thesis is you get a hawkish Fed, start buying puts up here. If you're a bull and you think we're going up into the bell or he's going to be dovish, you're just waiting somewhere in here to grab this. Well, it would be here or down here. We could do the daily low. Like if he comes out and he's like, I wouldn't say this is the hawkish trade. I would say that this would be like, he reads the statement over here, and then some fucking asshole like, there's the halfback trade right there. Some assholes like, inflation is terrible. I don't know. Aren't you afraid of 4.8? And then if he goes back and says, fuck you, this isn't happening, that's where your buy is. Just be in here waiting to get long. Leave this one down here. Please like and subscribe if you can out there. I don't really, I try to be a dickhead. I don't like followers and stuff. But we're making a change right now. We haven't implemented it yet, but you're gonna start seeing nice Captain Jim James. I try to be a dickhead out there in public to limit who follows me. You can never, like, once you hit so many subscribers or whatever, like followers and life and stuff, you can never go back to that. So stretch it out for as long as I possibly can. But we're at that time and place where we're going to. We're launching this new show. I've had a little bit of a hiccup along the way. I got sick, and but everything's gonna be fine. So that show is gonna continue. So I do appreciate likes. Do appreciate you reposting the stream other places. I do like that you make comments, like hit the like button, I guess. Yeah, we're back, baby. 100%. So no health scares. Yeah, you know the best thing he said today was, I got no cancer in my fucking whole body, so I ain't gonna die of that shit. Then they checked all my organs. They checked like my liver, my kidneys. They checked my checked some. I forget what they checked, but I was like liver, kidneys, and some kind of glands, whatever glands I got in my butt or something like that. They checked all that stuff. Like everything is good. Stomach is good. I got no cancer anywhere else in my body. Like, I ain't gonna die. I'd have to fucking like die of a stroke or die of like heart disease or something. And I don't have any heart disease. I got some I have elevated stress. So he was talking. So he's like none of your blood work is showing why you have hypertension or whatever. He was like, what is it? And I was like, well, I talk to people all day long and it's very stressful. I was like, so I get these like elevated, always worried, always read. I was like, oh, I got to read all these white papers, and then I got to think about it, and then I got to digest it. Then I got to do this show, and I'm like, I was like, I said what Joe Donut said to me. I was like, it's like being a nerd, being in a cafeteria every day, and whether you're sick, tired, whatever it may be, whatever the market's throwing at you, doesn't matter. Because someone like wants an answer, so you're like living and dying by the sword, like fucking 10 times a day, every day of the week. And so everything should be good. He's gonna put me on some kind of medicine for that, for the stress. And he's like, ever not gonna have stress? I'm like, probably not. I'm probably gonna be in a high stress environment. Like most people, like they go to like ER doctor, and then they stop after 3 or 5 years. They go do like something else. And we just do this every fucking day for 6 straight years, I think now, 5 or 6 straight years. So it takes its toll. Right? Sunday never ends. It's like elevated stress levels. Well, because I'll be trading and I'll leave here and I'll go to the GP. My GP's right down the road. So I'll show up and he'll run my blood pressure and he's like, what the fuck are you doing that's get you so amped up? He's like, one time I went to him recently, like it wasn't recent, like a year ago. I never told you guys this. I went to him for this about a year ago. I like showed up, like got off the show and went down to see him. And he was like, what the fuck are you doing? He's like, you're about to have a heart attack. He's like, you have to go to the emergency room. I'm like, what? I'm like, just give it like 15 minutes. I mean, I just got off this like really stressful thing. He's like, no, you just have to go to the emergency room. He's like, we have to have a diagnosis of this so that we can get you on a medicine. And I never got the medicine. I never went back to follow up on it because the other shit was going on. But he talked to me about it last week. He was saying, you need to start taking some drugs for that. You'll have a heart attack at the goddamn show. And Yeah, Yuri would tell you that there's no stress if you just sold calls and puts. Yuri retarded would say that, wouldn't he?
10 minutes time now at the bottom of the hour. We are expecting the FOMC press conference.
That's a good point. Sunday never ends.
We do have the live video on the calendar. We'll get it on the feed as well.
That's fucking hilarious, bro. But we are starting to change this stuff. We've been on hold now for a month launching the show. So I do like the likes and stuff. What we are going to do is we're more than likely going to move this show somewhere else. We're likely. So I thought I was going to do it here. And I built this out for it. But now we're talking about moving it to like New York City. Now, I didn't consider New York City when I got sick. The best rectal and colon cancer specialists are in New York City, obviously. At the Sloan Kettering, I forget what it's called anymore. I haven't been in New York in a long time, but it's like DNC Sloan something or other. Suck me off. It's on like Midtown or something. It's no, it's almost in Uptown. It's almost near Harlem, I think. Like East Harlem or something, but on the island. So I was like, oh, I'll move to New York and do this treatment in New York City. And but I didn't know what was going on with the treatment I needed. It's not as bad. I don't need to go to that hospital. But I still think the idea of being in New York City for this show is the way to do it. Either Chicago, New York, or LA. I also had recommended to me, recommended to me to go to Miami, because a lot of like influencers are in Miami, and there's a lot of like movers and shakers go there to party and stuff. So I can interview people in Miami. Now, I think that the best place for me to be is probably New York City. If I'm in New York City, what I can do is I can interview people on that show. Like I can have guests on the day show. I can have guests on the night show. And these people are people that you guys respect out there. A lot of them live in places like San Fran, LA, New York, Chicago, or they at least visit it every once in a while. So an example would be, if I reached out to like Wolf Richter and said, hey man, I had talked to him, like I sent him emails and we converse and stuff. But if I said to him, hey man, I got a small show and would you ever come on and just like tell me how fucking dumb I am and tell my audience how dumb they are and what we need to be watching. I think he lives in San Fran, but I bet he goes to New York. So like, I doubt that like a Wolf Richter would be in Detroit. And originally I thought Detroit would be the place. Like I would put it right, like Benzinga's corporate office is in Detroit. There's a bunch of fucking finance bros in Detroit, but they're not like famous people. They're like regular workers. So my initial thought was put a studio right next to Benzinga and have those finance bros walk by every day. So like you get the finance bros walking by making fun of me, trolling me or whatever, but then they're telling their friends, and then one of their friends is like, oh, I want to stop in and say something to that guy, either fuck himself or what's up, bro? I know you're just, I know it's just an act or whatever. But I think like New York would be like a better place. Like New York probably has the best opportunity for me to like interview the people you guys want to see interviewed or ask the real questions. Like you guys know I don't have a chip. Like you guys know that I've interviewed other people in the show that are very intelligent and they can come off as being too smart. Can you just top line it for me? And they're like, no, I'm just going to sound really smart. And I think I do a pretty good job of drawing that out of people, saying like, what's the top line in this? Like, what does this mean? Like crayons for a retailer. You ever notice how like everything gets obfuscated? Like the people write something or say something or say a concept and you're like, I don't know enough about that to know what he means by that. When you just want to be told point blank, this is bearish, this is bullish, this is sideways. So I think we're still going to New York City to do this. Now, I just got the phone with the surgeon. I have an appointment Monday at 2:30 in the afternoon with him or her. Sorry, it's a her, not a him. It was a him, but it's his partner is going to do it because she specializes in what I got. So I have a meeting with her Monday at 2:30, and I'm going to get this fucking thing cut out like this week or next week. So we're going to get rid of this fucking thing, and I'm going to I'll pay. I don't care what it costs. Like, I give zero fucks if it's covered by insurance. I'm gonna get the least invasive way to do it as possible, if it's possible.
Expecting the FOMC
So it's one where they go through my stomach to do it. That's like a quick recovery, like 2-3 days.
On the feed for those interested.
I've got the video here. You already see it. So what I'll do is I'll knock this out in the next couple weeks, and I'm gonna start looking to move to New York like September 1. If I can get what I need to, it's a pain in the ass. I used to live in New York.
OpenAI's Altman is to meet with White House's Wiles this week ahead of the AI framework deadline.
It's a pain in the ass renting in New York. If you're not from New York, you can get fucked your first time there because there's like not quite rent control, but there's like housing that they can only do certain things. They can't do this, they can't do that, but you have to get in that housing.
He's going to be meeting with a range of senior Trump administration officials, lawmakers, and economists to discuss OpenAI's upcoming models.
Then there's other issues, like not seeing the place. Then, like when you rent everywhere else, you just like provide your job that you have. In New York, it's different. They're like, they want all your bona fides. Like they want to see like months of this, months of that, months of this. Blah 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 blah. So it could take me a couple weeks to find an actual place in New York, but I'm gonna try to be there September 1 if I can, and we'll move the show there. The other thing too is I can probably find help in New York to help me with the show. Like being in New York, I can probably find and pay people to help me in the background. Like I can get an editor, a producer, someone for the socials, all that kind of stuff, and they live there, so we can meet. They can be in the office with me and that kind of stuff. So I think we're going to do New York. It's not in stone, but I think it's fairly in stone at this point. I've been looking, so if I can find a place, and I've been looking in like, let me ask you guys a question out there before this thing starts here, before this presser starts. Do you, if you've lived in New York City, would you rather, like the thing about like when I was, like I lived in Manhattan when I was young, like there's more people like living in Brooklyn. Like Brooklyn used to be a shithole when I lived there in New York. Like, yeah, it was a shithole. Like Williamsburg, Sobro, like they were kind of shitty. But Brooklyn is nicer these days. So I feel like I can't decide. Like to me, like the island itself is kind of dead. It's like a lot of tourists, a lot of like people visiting. Some people do live there. Some wealthy people live there, but there's no community. I feel like Brooklyn has a better community. Anyone think like Brooklyn? Anyone think like Park Slope or around Park Slope maybe, or southwest of there maybe? It is different, isn't it? Like I think I should move to Brooklyn and do the show in Brooklyn. It's way fucking different, right? I don't live there now. I visit, but I don't live there, so I can't. Yeah, Williamsburg used to be a fucking dump, man. I think even Harlem is being gentrified, right? But that's too fucking far away. It's like Harlem is like fucking and you got the Upper West Side, and then West Harlem is nice. East Harlem is being gentrified, is that right? You liked it when you're there? You live in Midtown. Yeah, Sneaky Neeks is saying it right now. Like, I love Midtown. I fucking love the Lower West Side. I love the Lower East Side. I actually like the Lower East Side more than the Lower West Side. I like the grimy dirtiness of the Lower East Side. I'm surprised that I like the Lower East Side more than the Lower West Side, but no shit, the South Bronx is being fucking gentrified. Are you shitting me?
Press conference with Warsh.
So I've got the presser up here. It's still not on. Unless I've got a bad link here. Hold on. Oh, wait a minute. Hold on a second here. Hold on here. Yeah, I don't see Warsh on right now. So we're still waiting. One more minute until it comes on. Queens Flushing. Yeah, I have a lot of friends here in Detroit. They like left New York City, moved to Detroit, poor artist friends, and now they're all moving out of Detroit again. They're all moving they're moving to like Pittsburgh. They're moving to Pittsburgh, Cleveland, Minneapolis, of all places. Yeah, I like it. Yeah, it's grimy and nice. I like the Lower East Side. I like the food. I like the culture. Like the West Side's a little white. Didn't say that, but Brooklyn's kind of like that too. Brooklyn's got a lot of like white going on. Like I'll be honest. I should say this. I would be fucking down to live in Harlem. Like I would, but my wife and kids wouldn't. My wife and kids are like, no more of this. Like, my wife and kids are like, you got Detroit, never again. They're like, we're not doing this again. Living in the hood. They're like, you did it. We experienced it. All right, here we go. Blue tie, baby.
My second FOMC committee meeting as chairman has come quickly. It's probably too early to call it a streak, but our discussions again were collegial and constructive. I'm truly lucky to work with colleagues so capable and mission-focused, and so determined, like I am, to sharpen the performance of the Federal Reserve. Today, as you know, our committee decided to vote by a 9-3 vote.
I'm reading what you guys are saying.
Maintain the target range for the federal funds rate at 3.5 to 3.75%. The committee is continuing its policy of making ample reserves in the banking system. The economy is showing impressive resilience. Even with recent shocks, the trends are positive and reveal solid growth. Job gains have kept pace with the workforce, and the unemployment rate has changed little. Inflation remains elevated relative to the committee's 2% goal. The committee remains resolute. You've heard this.
Be careful here.
But we will deliver price stability. As before, the policy statement conveys just the facts. It's steering clear of forecasting, a choice we consider especially prudent at these uncertain times. Uncertainty, however, does not mean a lack of clarity. For some households, businesses, and market professionals, 5 years of high inflation have left a mistaken impression that's hard to shake, that the Fed's implicit inflation target was somehow above 2%. Let me reiterate, there is no soft inflation target. There is no soft implicit target, not on this committee's watch. There's only a target, and it's 2%. Not one of my FOMC colleagues is under any illusion. We have begun a new chapter, and we understand that the 5+ years of inflation above target cannot be cured in 9 weeks or by a single month of modest price decreases. This Fed will not waver. Our credibility rests on performing our duties and delivering on our responsibilities. Americans are right to expect that because our nation's prosperity depends on it. To the regulars here in the press room, today's assessment might sound familiar, yet there was nothing inertial about our discussions, our policy, or our strategy. 2 economic developments are worth highlighting. The first is a very notable change since our last meeting 42 days ago.
Be careful here. Do not be long here. Be super careful.
Yields are materially higher across the Treasury curve. In fact, some of the increases in market interest rates between FOMC meetings are among the most significant in the last 2 decades, ranking around the top decile or so. But if the committee didn't change its policy rate, what happened? In the intermeeting period, market attention centered on real data and real economic developments. Prices reacted in real time to incoming information, and the reduction in forward guidance may have been a factor. Market participants are learning to play the ball, not the referee, and market prices will continue to respond in the direction and magnitude they see fit. This is, in my view, a change for the better, and we're just getting started. After all, the central bank need not always and everywhere be the center of attention. I understand the desire for rolling forecasts and commentary from this committee, but for our part, we need to observe market reaction to developments, direct and unfiltered. I want to stress, of course, that decisions by this committee matter a great deal. And where necessary and appropriate, we will not hesitate to act. A second economic development is one that I noted at the congressional oversight hearings this month, but it's worth repeating. The most striking feature of the economy is the strong growth of business investment. The surge in high-tech CapEx has been remarkable, but that does not necessarily make the Fed's role any easier. In the AI-related category of high-tech equipment and software, the most recent data shows 4-quarter growth rates of nearly 20%. This is helping to sustain the healthy momentum of manufacturing output. More generally,
3-month yield creeping up again.
FX is preparing the ground for future growth. Nonetheless, the precise timing
VIX creeping up again.
of effects on the
VIX 9-day creeping up to close the gap higher.
predict.
Be very careful. We could go down here. Be very careful.
Decisions. But just as important is candid discussion of the big things that matter most. That too is a priority in this new chapter at the Fed. In our meeting, vigorous discussion centered on 4 questions, which I will enumerate. First, we talked a lot about the implications of the past 5 years of high inflation on the current policy conjuncture. To echo an old phrase, has the past really passed? Second, my colleagues and I considered the economic shocks of recent years, strained supply chains arising from the pandemic, military conflicts, energy supply disruptions, substantial increases in tariff rates, and yes, the surge in AI-related investment. These differ in their sources. Do they also differ in their effects on output and employment? Third, we took up the related question of price increases arising from shocks. The business CapEx boom, for example, is driving up prices of memory and logic chips and associated AI infrastructure. Do these changes indicate a broader inflationary dynamic, or do we just focus on them because they are under the bright streetlight? Finally, we discuss monetary policy tools and strategies for achieving stable prices. If, as the Fed has long held, interest rate policy should be its primary monetary policy instrument, how much accommodation are we getting from the balance sheet? In all of this, our work is advancing at the Fed. We're asking the right questions. And in this consequential time,
I am long here.
we know how very much depends on getting the right answers. Of course, you've all arrived with questions of your own, so let's turn to them now.
Let's start with Steve.
This is the scary part.
Thank you for taking our questions, Mr. Chairman.
Steve the Bear Leisman.
Couple months now, or 9 weeks, or whatever number it is, to see the markets behave in the absence of forward guidance. I'm wondering if you could tell me, what message are you getting from the markets as to where policy ought to be right now?
Yeah, so I think officially it's 8 weeks and 4 days, but I'm not counting. The message from markets is the message from markets. What I've really been trying to do, Steve, as I think you appreciate, your colleagues appreciate, is getting an unfiltered message from markets, getting a direct message. Letting buyers and sellers meet at prices for treasuries, for the foreign exchange value of the dollar, and then trying to judge for ourselves, what does that mean about our remit? How are we doing on inflation? How are we doing on employment? We're trying not to interfere with that market signal. That's part of the reason why we've been somewhat spare in our words, why we pulled back from forward guidance. So they're reacting to events, I would say, much more directly over the 42 days since we last met. This is a good thing. As I mentioned in the prepared remarks, we've seen a material tightening, not just in nominal rates, but in real rates too. And we're observing it. We're trying to stay out of that because, many of you might be interested in our reaction function. We're interested in the reaction of financial markets.
I get that, Mr. Chairman, and I guess the follow-up question is, if the markets are talking to you, what do you hear them saying? And if it's real rates are higher, it would suggest that that's where the funds rate ought to go.
Yeah, so,
And- Sorry.
I'm sorry, it's your question. So, interpreting markets is an imperfect business. We central bankers, like market pros, can think these things are overdetermined, but let me offer some speculation. First, as we said in the FOMC statement that you got at 2 o'clock, the economy output is solid. CapEx and productivity are strong. Labor market's solid, steady. The bond market, the treasury market, it seems to be saying that as well. If I were to try to break down, disaggregate the treasury market signals, I wouldn't be able to do it perfectly. But
Taking the money here.
many of those same things, and that's why we're seeing a tightening both in nominals and in reals. Even while at some level we haven't done much in 42 days, the markets have done quite a bit.
PT1 right here.
Claire Jones, Financial Times.
First place to get off the bus right here. Second place right here. Second place right here.
We saw three dissents. Could you characterize the arguments that those dissenters put forward, please, and tell us a little bit why you weren't persuaded by them at this stage? Thank you.
So I guess I shouldn't give you their best arguments. I'll give you some others. So you're right. I asked for a good family fight and I got one.
I'm out here. I'm flat. I'm looking to buy another dip down here.
I come into this meeting, even this press conference, heartened by
Something like this. Take that out next.
most of our discussion were on the big questions that matter to the conduct of monetary policy. We didn't sort of hide from them. We weren't scared of them. There was a lot more interaction between and among my colleagues. It was a real family fight. My view, which you've long heard, is that's the better way to get policy right. That's our North Star. So there was a lot of agreement that I heard that we have the powers, the tools, also the authority to deliver stable prices. No walking back from our responsibilities. There was a large majority support for the decision that we made in the room. But I also want to leave you, Claire, with one other impression. There was nothing inertial about that discussion. It was an active, robust discussion about what's in the full range of what we can do and might want to do in the period ahead. You characterized accurately there was a disagreement about a decision today. I would say that doesn't sort of capture the full essence of the discussion. The path to central bank heaven requires delivering on our remit. These days, that means delivering on price stability. I wouldn't measure that path in 42 days or any one particular meeting. And I came out of that meeting even more confident that this is the right team to win the battle against high inflation.
How much do you think not going in July was down to the cool CPI print for June?
So in 2 words, not much, not much. I'd like to believe that the committee shares my views, which is the historic problem with data dependence is the data and the dependence. We are not relying on any one individual piece of data as cover or as an excuse or as validation. What I care about and what I think the committee cares about is trends on the data. Sure, we got some encouraging inflation data. I think at the meeting 42 days ago, I said something like 63 months of inflation above target. I didn't say 64, though the final calculation might be a close one. So we'll be watching inflation data over the period ahead, but I also don't want you to leave the misimpression that we're sort of breathlessly waiting that. I've called for a task force to revisit both the private and public data we use to make our decision making. That task force is out doing their work. I'll be checking back in with them the next couple of weeks.
They have results already.
We overly relied on any one piece of data, including that data, which surprised some a couple of weeks ago.
Hi, Chairman Warsh. Thanks. Neil Irwin with Axios. Thank you for taking our questions. So the Fed funds rate is now about 75 basis points below the 2-year yield. Suggests markets think you'll have to tighten eventually, about 100 basis points below most Taylor rule estimates. You're hitting your employment mandate, inflation stays high. Why should rates not be higher today?
There's a lot in there, Neil. So rates are higher today than they were 42 days ago. Markets have made decisions because we...
Just going to move this over so clean this up a little bit. We did the thing over here.
Market judgments have moved up on what nominal rates are across the Treasury curve. That doesn't mean we take them as by dictation, but we're observing them. So I think it's a mischaracterization to say that markets haven't reacted because we didn't move today. Markets are reacting in real time. In the period ahead, we've got important decisions to make about the policy rate. Markets in the intervening period, I think, have quite a bit of decisions to make. I'll see if I can put it this way. Monetary policy matters not just by what we say or even what we do. Monetary policy matters by how it affects the real economy. And these prices that we see in financial markets is one of the many ways in which it affects the real economy. We'll be continuing to watch that market information, see how it responds to incoming events, and that can help inform our decision making when we meet in 7 or 8 weeks.
How would you characterize in the family fight the last couple of days?
This is 1600.
Who wanted to hold? Was that a strong conviction or was that a hair trigger close call on holding versus tightening?
This is the back test right here.
I think the vote
Right in here.
9-3. The broader discussion to my ear over the course of the last days showed a lot of agreement on the hard questions. The 4 questions I raised at the outset about what's really happening in the economy with the shocks and absent the shocks. What are our tools and our capabilities? What's the effect on prices on output? I heard a lot of commonality on the questions. Were there different leans on the answers? You bet there was. So could people come to different conclusions? Absolutely.
No.
But my own judgment is this is a period of
He's lying.
thinking, not watchful waiting. And I think
He's got the White House air.
Thank you, Colby Smith with the New York Times. You've mentioned that looking at the Fed's policy tools is one element of a 3-pronged strategy to address the inflation problem. So I'm curious how you view the effectiveness of those tools. If inflation is too high and not coming down, is the best remedy to raise interest rates?
So that was the discussion in the last 2 days. Is that the dominant remedy? If inflation continues to be elevated through the forecast period, interest rates could well be part of that solution. But I wouldn't say it's in isolation. I tried to describe in my remarks today a point that I made to the oversight committees a couple of weeks ago. I think there was a misimpression by some in financial markets, by some households and businesses, that central bankers like me, we set a 2% inflation target, but maybe we were more tolerable of a somewhat higher inflation target.
Oh!
In economics, we'd call that the revealed preference. And so might it have been rational for people to think, well, their inflation target's somewhat higher. What I heard in the last 2 days, what I've heard in 8.5 weeks is no. We will deliver the 2% inflation target.
What are you fucking talking about, bro? The fucking real rates are fucking lower than the inflation rate. Get the fuck out of here.
Absent the tools that you reference.
It's called running it hot, bro. That's what you're doing.
Is ensure that expectations are centered around the right number. And I think we've made some progress on that. I am not suggesting we're done on that. It's worth reiterating. And ultimately, the business we're in, Colby, is performance.
There's no need for breathlessly waiting for incoming data. Your fucking year-over-year data is screaming it right now. And your short-term data is screaming the same thing.
We demonstrate we're responsible for it. We're not blaming as another. And our policy tools, like you referenced, is the third and equally consequential part.
How are you factoring the fact that a large portion of the inflation overshoot is being caused by supply shocks, as it's mentioned again in
PT1 hit?
Does that blunt the effectiveness of rate hikes in your view?
First, on the premise of your question, it was almost as if you were listening to our discussion in the last day and a half. A lot of our focus was on trying to understand and identify underlying inflation dynamics amid shocks. We take these shocks seriously. There have been a series of them that have been hitting this economy. We're not looking through them and saying, oh, they don't matter. But we're trying to understand.
Question becomes, what's the magnet for 4 p.m. month end? Is it 750 or is it 760?
That are quite far removed from it. Our goal is to have growth that is broadening.
If you have 748 calls for Friday, they're going to be printing hard and heavy at some point.
I'll be the first to admit the shocks make this job and this policy conjuncture a little tougher, but that's among the chief questions we've asked ourselves. And around the room, people have different views on it. I tend to think in the coming months we're going to refine that view and have a better judgment, and we're going to have market prices trying to help inform it too.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. I guess I want to drill down maybe a little bit. What specifically, in your mind, would be the argument then for a pause today?
So I wouldn't characterize what we did as anything like a pause. I would characterize what we did as a rigorous review of the economic situation. I would characterize what we did as a review of the big hard questions. And I'd characterize it as a view of what our own homework is to try to resolve those questions in the period ahead. If you were to try to force a description that this was a pause, I would say financial market prices would take the other side of that. Financial market prices in this intermeeting period, they didn't pause, they reacted to the inflation data in one direction, strong economic growth in the other direction, and nominal and real rates went up. Did the Fed take an explicit change in its policy rate today? No, but I think that's the beginning of the story, not the end of the story.
And if I could, I did want to ask, not forward guidance, but looking forward. Traditionally, a Federal Reserve chairman uses the Jackson Hole Summit as a sort of a reset of monetary policy. Well, how do you look at the speech that you're going to make in August?
I look at it like a blank piece of paper right now. I have not begun consideration with the incredible team here what would go into that document. I think you characterized it correctly. Historically, at least from my first tour of duty at the Fed to more recent periods, it would be sort of a setting up speech more often than not of what was going to be happening in the fall. I haven't made any judgments on that.
I'm getting blown up here. Everyone's making money.
Judgments will have to come to. If I could, in the high mountain air in Jackson, Wyoming, I'd like to also frame the big question.
Saying I'm now green, back green again, my whole week. Oh, yeah.
Meetings and press conferences to get caught up in the myopic. Did you do this by a quarter or do that? Ultimately, whether we deliver on price stability matters some, the decisions we make in 6 or 7 or 8 week periods. But they matter more. What are the big questions? What's really happening with productivity? What's really happening with demographics? What's really happening to
productivity is good.
Economy amid the shocks? Haven't made a decision whether it's going to be a big picture speech or whether it's going to be a more traditional setup for all the action we're going to have between September and December. I will tell you one other thing that I am doing between now.
Coming into the Daily Trigger now.
I'm checking with those task forces. My first principle of establishing a task force is find the best subject matter experts anywhere in the world and put them together, especially put them together with other people who might disagree with them. In the next couple weeks, I'm going to be doing a check back in. I've given them time.
That's horse shit.
Hard about their agenda, their debate, their schedule, and when they might be ready for prime time. I'll be doing a little bit of that checking, and that may or may not inform anything I have to say in Jackson.
Be careful of the event ending soon at like 3:45, 3:30.
Chairman Warsh, I want to follow up on Colby's question about policy transmission. You've said there's no cruel choice between stable prices and full employment. Rates bring inflation down by cooling demand. It's generally thought that can show up in the labor market. If that's not the channel you're relying on, what is?
Yeah, so let me go back to first principles, Nick. I don't believe that either part of our mandate is generally at war with the other part. I do not believe that price stability and full employment is an either-or proposition. There have been policymakers over the last several generations who have thought that there is a strict trade-off there. That isn't my judgment. In fact, my judgment is if and when we deliver on our remit, we're going to be satisfying both prongs. We're going to have price stability and full employment. And in fact, if you want to do the most harm to the labor markets, you would run a period of high inflation that's variable such that employers, businesses, wouldn't really know what's going on. So I think the two parts of our mandate are equally important. We have no legislative orphans here. I've been talking mostly about price stability because we're doing pretty well collectively as a country, as policymakers on the full employment side. But we're doing considerably less well on prices. That's why we describe them as elevated, and that's what's taken most of our discussion. In terms of transmission mechanisms of monetary policy, I think different tools work through different transmission mechanisms. The interest rates work through lending channels and credit channels, maybe confidence channels and foreign exchange. The balance sheet probably works through some other channels like signaling and portfolio balance. We're keeping full abreast of all these tools in making policy. But if the suggestion is somehow we're going to be fine-tuning aggregate demand so it catches supply, that's not my mental model. I don't think we're great in the fine-tuning business. We're trying to get supply and demand in broad order, but really what we're doing as we sit here
VIX 9-day getting killed.
I think we've got a reasonable sense of what aggregate demand looks like in this economy. We're inferring
VIX 9-day just hit the prior low on July 28th. Watch out for a roll and a bounce. Bounce on VIX really quick, and then a roll in SPX in here.
It's making that calculation a little harder to judge, but in the period ahead, we're going to be trying to judge just that.
And if I could ask, where exactly was the disagreement today? Was it about the inflation forecast, or was it something more around the risks, the tactics?
Yeah, so I'm going to I'll let the dissenters speak for themselves. The way I heard it over the last 2 days was overwhelming agreement on objectives and authority and
Sandesk ripping faces off from 12 p.m.
The judgments as to how best to achieve the price stability, that was probably the question that we were trying to answer. What's the best move? What's the best strategy? What's the best way to achieve it? And a second question that was asked is, when do we need to make those harder calls? When do we need to make those decisions? And like I said,
You want to look at Sandesk really quick?
I was comforted that markets in the intermeeting period weren't reacting to us. They weren't reacting to dots or to speeches. They appeared more than ever to be reacting to real-time events. So
This is SNDK. You want to be buying this or this right here, 886 or the $1,000. It is bouncing right now.
A useful development. We don't endorse any particular market move, but I'd also suggest we observe them with keen interest.
This is where it broke away right here from where we drew this. We drew this from down here, actually.
Janelle Marte with Bloomberg. Following up on that, there was more uncertainty in the markets about what the Fed would do at this meeting. To some extent, you might think that's what you want to see. But my question is about, is there a point at which you would not want to surprise the markets if they were pricing in something with higher certainty that was opposite of what you were intending to do? What are the risks that you see associated with that?
Yeah, so it's a good question. Surprise is not the objective.
Congratulations, leverage. It was close. There's like one more layer. There's like 886 and 862. You could buy both those levels, and I would feel confidence.
Almost everything else should be in service to that goal. By not spoon.
SNDK, bro, is gonna fucking keep mooning. That shit is gonna be worth like $2 or $3 grand when it's done. Don't listen to any of these people out there talking about that stock not being. Don't listen to anybody out there. That stock is going to keep mooning.
That's the internals of financial markets. Instead of just repeating or echoing what we were saying back to us, they're giving us somewhat, not perfect, their own judgment. Surprises are not the objective. But at the same time, I would say we didn't come into this meeting feeling constrained by the full range of alternatives we had in front of us.
What's Lam Research doing?
Have continued to discuss how they think about policy.
This is what we drew in for Lam Research. You want to see it?
Offer your reaction function, or your
We drew this yesterday, I think, when I was fucking tired as fuck.
control of the narrative.
So not very concerned.
This one's climbing back higher again. We're going to target at 310, 338 up here.
Fed say, well, we don't want your forecast. We don't want your dot. We just want your reaction function. Part of me here is what we really
That's
want. Is
Lam.
your forecast. What we really want is your dot. In terms of reaction function, let me sort of disabuse people of a question that may or may not be real and be
I don't think I looked at Starbucks yesterday.
Central banker.
I looked at CMG, didn't I?
Especially a central banker where the labor markets are more or less at equilibrium. Any central banker, when he or she sees underlying inflation moving higher, he or she is more inclined to tighten policy. Again, when you've achieved the other side of your mandate and you see underlying inflation falling, he's more inclined to loosen policy. That's my reaction function, and I don't suspect it will cause people to not continue to pry for more.
I could ask like 5 quick questions and it would destroy everything he's saying.
A lot of countries coming out of the 2008 crisis, we're in crisis mode. We were purposefully.
He's pretty much saying that the inflation target is 4%, 3 or 4.
offering forward
He's telling you it's not 2% today.
if we're tying our own hands
He's
behind
lying to you.
Well, in crisis mode,
Speaking out of both hands here.
as a very prudent policy. But in more benign
2% is not the target.
strikes me as worth revisiting. But markets and market participants and reporters have learned
Yeah, with CMG.
to devour all that information. So I take seriously that the pullback of forward guidance requires some transition.
2 times speed on Kevin.
But our general judgment is going to help us make better decisions, and in so doing, satisfy our remit.
Put Kevin on 2 times speed.
Thank you. When you talk about the 2% inflation target, what measure are you relying on?
Yeah, so I'll give 2 answers. First, let me give the proper standard answer.
They don't looking for 2. They're fucking lying, bro.
Outlines a statement of purposes.
You just ask them to say the effect of it. Just say the fucking year-over-year inflation. What is that? Are we going to run that to 4.8? Just ask that question. It's that simple.
Measure of PC inflation as the objective function there. I have enough of my own, so that's our number. We're sticking with.
All right, then stick with the year-over-year data. What does it say?
We might say about strategy. I suspect the task forces might have something to add, but I'll say
I've been in and out of calls this whole way up.
the Lucas critique, some version of good heart.
I think I'm going to try to get some. I'm not in anything right now. I'm going to try to.
Talk about
I want to try to get into like 350
or something else.
and take that one up. So this is 350 right here.
Consistent with our objectives.
Like see some kind of like cool it off, jackknife down.
Or very good
Take like most of that trade in there, and then,
If you said to me,
or at least the half back in here.
abide fully by
Like
the
350, grab something in here. There's another problem here, which is if you get a quick jackknife down after the bell, you might want to wait until
a broader set
like-
of inflation data than PCE. So without
like 405 or something. Quick jackknife down, then whammo up.
trying to understand, like my colleagues, what's the
Be cool in here right now. I left this high here for 330 to account for him still talking,
perfect science.
and then the 350 mark here could be here or even down here.
So I've got a task force for that.
I think it's more time based than.
It's trying to look and see whether we can't separate the noise from the signal.
I agree with speed him up a little bit. This fucking guy is taking the whole day. Jerome would be done right now.
I care about
I agree with whoever made that comment. I thought you were joking, but the more that I think about it, the more I'm like,
my lens is broader than
this
that.
fucking guy is slow as fuck. What's he gonna do? Talk till 5 p.m.? We're normally done here. It's like Jerome just rattling off. We're not even into the fucking bleacher. We're not even in the bleacher, like 3rd tier press pool yet.
And maybe you can help.
That fucking guy is not a 3rd tier press pool.
You've said over and over again that your job is to bring down prices, to get prices stable, to hit your target, and that you will hit your target.
Okay, then say it then. You fucking spineless fuck.
They've raised rates. But all you've talked about today is talking about it. And it's not like members of the committee weren't there before you talking about it. So I guess what the American people might be asking is, what are you waiting for?
5 minutes coming in right now.
Believe it or not, this press conference is not all I've done today. We have spent.
Why don't you just fucking say it to him?
In the last 2 days, 2 weeks.
Like, you can just point it out. The inflation's coming from here, here, here. Your fucking year over year is fucking mooning, but they're not going to say this. This is a complacent jerk. These fucking jerk. The press is in on this shit.
We've also thought hard about the period ahead. What among these questions will be answered with more clarity, certainly not certainty. So the decision we made today, the discussion we had.
You're going to get a bounce here.
Was the farthest thing from inertia I can imagine.
Like a bounce like this, then like that, and then down here, something like this. Just be patient here, okay?
Heard the results of it, but I would tell you that this discussion was far more robust, and our thinking about how best to achieve that target.
VIX getting fucking annihilated right now. VIX coming down, VIX 9-day coming down into the monthly right now and the daily.
If I were to steal a follow-up question, I won't let you. You won't be giving it up. If I were to steal a follow-up question, well, what's the world think about what you've done?
Do not belong here.
Reiterate, what we do isn't just about what we say. It's not just about what we do. We're in the performance business. And so if I look at the Treasury curve, if I look at the dollar, if I look at a lot of things that are internals inside of...
Ask about the 3 and 6 month in the bond market this week. They're not going to ask that question. I could fucking list off 5 fucking questions that would destroy this guy publicly. And that says a lot. It says that he's not willing to discuss it. The press doesn't want to fuck around with it.
But I don't.
So everybody's on board and running it hot.
Magic wand. This isn't something that we're going to be able to carry out.
Cocaine, baby.
But we're going to deliver on the responsibility that Congress gave us. And today's meeting and the preparation for today's meeting was an important step towards that destination.
I'd like to follow up on the task forces as well and ask, what vetting did you do of the people that you appointed to the task forces? In particular, given Mark Andreessen's substantial political spending, $25 million in just the past year, candidates who oppose strict.
How about the office in the White House?
How can the public be confident?
Why don't you bring that up, bro, if you really don't like them?
Provide an independent assessment of AI's economic effects rather than one aligned with the interests of the AI industry.
Yeah, so I selected 15 incredible subject matter experts to tackle 5 of the most important questions that if we get the answers right, we're going to do a far better job in delivering. And if we get the answers wrong, we have a problem.
That's not what I said, Pandorum. I said don't be long here, and then I said get long, and I said I got long. Go back in the tape and look at it. Hold on a second here.
The Federal Reserve and the members of the board and the FOMC, we will be the consumers of the outputs from 5 different committees. The judgments we're making will be informed by, but
take 2 seconds.
Determined by these outside groups.
Lying motherfucker.
My theory of the case in establishing the task force.
I got it on tape, bro. You watching this show right now, go back and look at the tape and listen to it. I said, don't be long here, don't be long here. Then I said, I'm long here. And you know why, because I got rules, and you should probably already know that.
Inside every committee. So they too can have a family fight.
Say my motherfucking name, bro.
This is not outsourcing to people that aren't known and haven't been vetted.
Right, Tampa Bay Buckeye?
Whether new ideas can catalyze a broader, better, more informed discussion inside the room. And I'm very confident.
Probably getting blown out today.
I am impressed by the credentials of these 15 people. And
or who is it? Maybe it's Quinn.
I've known
If you are Quinn, fucking suck my balls.
And I think they're going to give their best views on the subject. But ultimately,
Talk of the tape. I love that's it. The song, right?
To our oversight committees and to the remit Congress gave us.
I like it. Talk of the Town is the name of that song.
Hi, Ann Saphir with Reuters. Nice to see you again. So I need a little help here too. You've said
got him.
You have no tolerance for inflation. And yet we are seeing above target inflation repeatedly for 5 years and through your term so far. And sure, you have no magic wand, but you have not taken action. You just gave us...
All I can read right now is the chat that's going across right there. It's the only chat I can read, so I'm like...
Inflation is rising, that you would tend to think that you might need to tighten. And with the exception of the most recent inflation print, that is what we've been seeing. So could you explain what you mean by no tolerance for inflation? And
what is she saying? Like, the fucking latest inflation print was one of a squiggle line that's been bouncing up and down while the fucking year over year is just mooning.
Households and businesses. Impatient.
Get me in that fucking room so I can ask some questions. Someone get me some press credentials. Put me in the fucking bleachers in the back and make sure I get my hand that he picks me.
The board has been in business for 8.5 weeks. The patience, the impatience that households and businesses feel have been going on for 63 months. We are on the job. We will deliver. We are focused like a laser on making sure we can do it. But the suggestion that we're going to be able to do it with our magic wand is one I want to disabuse you and everyone else of. But the discussion in the last 2 days give me more confidence even than I had 8.5 weeks ago. This team that we have at the FOMC.
Yeah, I got to start the newsletter back up.
We have from board staff.
I'm getting told that by everybody to start doing the nightly brief again. Like the one that I handwrite, I'm like, blah, 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 blah.
Get smarter on those. We're going to deliver on
I got to hire some people to make my time for myself to do it again. I want to do it again. I do. I loved writing it. I actually enjoyed it.
Are certainly not saying all clear, but
Nope, no calls here, not yet.
in concert to
If he exits this stage, we're gonna drop.
financial conditions in this intramedia.
No calls yet. Don't do nothing.
And that
We're almost in the third tier, like stringer fucking press pool.
provided us
Not quite there, but almost there. She's kind of like the stringer, so
the ability and capability to deliver.
just be easy. We're gonna try to buy a dip at like 350 or just after the bell for the reports after the bell.
faith in
Or you know what, just get long here. Fuck it.
ability to sort of make a judgment and then you to
Do whatever you want to do.
from that judgment. How does that affect you when you come up on the September meeting and markets are seeing a near 100% chance of a rate hike as they see now? How does that feed into your decision making and your thinking?
So we're not going to be constrained by market prices. We're not going to be constrained or take verbatim from what the market's doing. But I think it's useful and to understand.
He's asking the wrong questions. It's not pricing. It's the fucking inflation rate year over year. It's that simple in PCE and CPI.
Land the plane and deliver 2% inflation.
So you're either saying one of two things. You're fine with running it hot at 4 and 3, which he should say, which he's not. He is kind of saying that.
By providing rolling commentary, I can assure you that we're going to have less information, less ability to land.
And it's probably midterms too. Once the midterms have passed, all of a sudden he will care. So that means he's got the air of the executive.
As direct and unfiltered as possible. It isn't to the exclusion of data sources and opinions and other
There's no opinion. It's just the data, bro.
But if you're hearing from me, we wanted to make sure we were getting a better.
Dragging me out of the room.
I think in a relatively short time we are.
We'll go to Brian Chung for the last.
And that's your reporters out there. That's our reporters.
Chairman Warsh, Brian Chung with NBC News. So you said you'd be open to having press conferences when there's news to make. So today, no change to rates, no forward guidance. For the average household, I guess, what was the news today?
So
That's actually a good question.
apparently it was news that I had a press conference. Let me
That's actually a decent question.
offer some clarity on that. Between now and year end, my predecessors and the Federal Reserve committed to press conferences this year. I'm committing to press conferences this year. That might be news to the people in this room and of no particular interest to your viewers and your readers back at home. What I can offer as assurance is that the Fed's on the case, that this Fed chairman feels better about this board and this committee's ability to deliver than I did when I showed up here on the first day, and I showed up pretty confident. I've been heartened by the reception that I received. No doubt in some of your commentaries today, you'll talk about a divided Federal Reserve.
Yep.
Well, that's not the feeling.
2 and 3 dissenters is a divided Central Reserve.
Was a group of professionals.
Two is a divided. 3 they got 3 today.
Judgments, but eager to roll up their sleeves and have a family fight, and eager to reform the way in which the Fed does policy. A keenness and open-mindedness and curiosity about that. So we have a far better chance to deliver on the remit that Congress gave us. And so I want to leave you with the optimism of a new central banker that we're committed as ever to deliver and to offer an assurance we will. Thank you all very much.
Woo! I kid you not, at least until the midterms, this fucking guy is a super fucking dove. Super. All right, let me turn this off here. Okay, give me one quick second here. Where is this thing? Let me mute that right there. Get rid of this. Okay, so he's stepping away now. You want to be very calm here into the close here. They could end up taking a lot of this trade back. This is the downtrend right here. Just watch this downtrend right here. So if we sit here and just putt around, maybe we can grab this one, or maybe we can grab one down here after the bell. We do have a substantial amount of the S&P 500 reporting this week. I think it's 36%. Let's check this right here. After the bell today, we get Microsoft, Meta, Robinhood. A note to you that Meta needs to be bought back severely. So if there was just a short covering routine, Meta is one of the big picks. After this bell, we get Microsoft, Meta. We charted both of those yesterday. We charted Amazon, I think. No, we didn't do Amazon. Yes, we didn't get to Amazon, did we? But I did chart everything that is reporting today after the bell. It was a mixed bag. So if you are bullish after the bell on these reports, and then on Thursday we get Amazon, Roblox, Reddit, Amazon being the big boy, and we get Apple as well on Thursday. And you know that Amazon's already kind of been ramping. Apple was on that list of being bought back, so I haven't looked at Meta yet today to see where it's at, but I'm interested to see what Meta does after the bell, if it like sends us over and up into the reports for Apple tomorrow. Apple would be kind of like the top of the market. Maybe Apple falls. So we have like between today and tomorrow, and then maybe one more pump up into Friday's close. And then some kind of an unwind once we hit the 31st and into the 1st. We'll play it by ear from there. So just be kind of calm here. Don't do shit. Just wait until we get towards the close. Start thinking about 3:50 in the afternoon when the Robinhooders go away. I don't know if that's still a thing or not, but I don't know if they have to close their zero dates still because of their risk something department they say they have. The daily low was right here. I should have left this on. I stole it to pop it up higher earlier, but it's right there. Here's the daily low in case we can sneak inside of here. Just be patient in here. I didn't go over Starbucks. I didn't. I went over CMG. You know, yesterday I got up at like fucking 4 in the morning, I think. I had to be like I couldn't drink anything. I had to like expel shit out of my body, and then I had to take a shower and stuff very early, so I didn't like want to get my pants pulled down and have them looking at me. So like, and my appointment was very early yesterday. It was like 7:30 in the morning. I was actually late getting to it yesterday. And then I did the show and stayed late till like 5 p.m. or something. So I didn't get to everything I wanted to get to yesterday. So I apologize for not getting to that. Just be patient in here. Just chill. We'll let all this cool off and try to pick up something for after the bell for tomorrow. There's some other notes here too. I have a little bit of concern here. Let me just show you this. This is the VIX 9-day. And there's a little bit of a bounce here, right? This is VIX 9-day. So, you get a little bit of a spike up here into this close, and that means down, right? And then we'll try to take this leg right here. So just something up like this and then like this. So we're waiting for this VIX 9-day to kind of go out a little bit higher. Okay? Just be cool, be calm. Don't be buying dips. Don't listen to that fucking whoever the fuck that guy was. Don't be listening to that guy. You just chill in here and wait for a dip to buy either at 350 or like 401, 405. Sometimes on big report days like this, you'll get something like this. And like we're down here hanging out. Then it's like a spike up, and then it's like wham for like a couple seconds, and then whipsaw to the upside. So just be calm, cool, collected in here. Don't do shit. That is advice. Overall, from that, if you want like my first takeaway from this press conference, I'll give it to you. You could certainly tell that Warsh wants nothing to do. Like, I think the idea from Warsh is even bringing up we're not going to go into a hiking cycle, let alone adding a 25 basis point hike. It's hot potato, and you can see that everybody else knows the same thing. You can see even the press corps. They don't want anything to do with it as well. They probably want to be invited back. You could see I'm going to turn this down again because I was trying to listen to him closely here. Hold on, check 1, 2. So, you got the problem with the Fed does not even want to discuss this stuff. You can see the press corps even knows it. These press people are not fucking dumb. They are smart as fuck. They know more shit than you and even I know. They're unwilling to discuss it as well. So there's still like the gloves are still on with Warsh. There was dissent. He was correct about that. You will hear that. If there were 2 dissenters today, that is dissent. We had 3 today. I did notice that earlier. What else? There is some breathing room now in the 3 and 6 month. The bond market is saying, at least right today at this moment, that they're going to give more rope to Warsh and to Trump. And there can be an argument made that the bond markets. There can be an argument made the bond market is willing to give that room because the executive authority wants to make it through the midterms. I would be fascinated to hear this argument from Warsh come post midterms. I would expect the meeting after the midterms, if the Republicans won, he would come out and be a little bit more hawkish. And maybe we are looking at like a mini 2022 for next spring. Start penciling that in. From my takeaway, like initial reaction today, I would be thinking to myself that this spring we're going to get a mini hiking cycle. We're not going to get 2 hikes. You're going to get an actual hiking cycle. Post New Year into at least spring or summer. So we're going to get a raid. This is almost sealing the deal on a bear raid come spring. Noteworthy on this too, Larry Williams mentioned this last November that the springtime of 27 there'll be a huge bear raid, but it's not the end of the bubble. And that is what this is setting up here, is that they're going to run this shit hot into at least the midterms, and politically just is not viable. There's some other things in this press conference too as well. Himself, he focused on things he could defend. One of the reporters mentioned price, like stock market price. Everybody knows that stock market price doesn't fucking matter. And he was more than happy to entertain that. And even what he was focused on when he was speaking was a lot of like short-term stuff, which is not what he's looking at in any way, shape, or form. So it's the same as the last time. This is a dovish Fed with no hike, if you want to know. Now, there is some potential negative to this. And that could be if the bond market does act up or revolt to this this complacency. If you see something like that, there is potential. Not yet. We don't want to trade it yet, but we want to be like laser sharp focus on the 3rd of August. You want to be very just laser sharp on the 3rd of August because that's when we can get more unclenching. If we get some more unclenching on the first week of August, it could be a bloodbath to the downside. We sweep those lows that we were talking about here, the 26 and maybe even the 7090 on SPX. So just be extremely careful as we head into not careful now, but careful after we exit the month. What else do I have to say? Quick takes away from this. Until I didn't get a chance to read the press statement. I'd probably need to watch this press conference once more, which I normally do. I'll watch it one more time and then I'll read the press. Normally I read the press release today and then I read it again, but I haven't read it yet today. So that's all I've got on this stuff. That's all I've got on this presser today. But you can see certainly that. You can see most certainly that there isn't even the want to even today there was not even a want to say, hey, you might see a hike in September. He didn't want to discuss that today, and nothing was discussed on the money sloshing around or how hot the economy is running right now. We are close to like that COVID shit. Like anything over 4.8, we start entering like that COVID territory again. Okay, we're now coming into 330. Remember the 350 and just post market. If you're trying to get long, we will try to take a long there. Let's see what we can catch in here. This is actually a pretty good place to get long. Even something down in here would be nice. There might be like one more jack up, something like this. Or even something like this and then down one more time, touch it. So it's something like this. Here, I'll just draw it in like this. Hold on here. Something like this. Something like that. Maybe even something just down in here or a ricochet up. This trade right here is this trade right here. We didn't buy that bounce. We said don't touch it. We didn't know. I lined this up for like time, like, he's done at 330 and then 350 to buy. Let's get rid of that for now. I'm just looking to take this thing up. I think buying here, it doesn't matter. You pick your poison, whatever you want to pick. I'm going to wait a little bit longer if you want to know what I'm doing. I'm going to wait until probably 350 and see what's going on, and then I'm going to probably wait for just before the bell. But this could start running right now is my point. So this is a solid line. I know it's all dotted right now, but that's a solid line, that's a solid line, and that's a solid line. Don't necessarily need to come down here or come down here. If you are getting long for ER or for Friday or anything like that, if you're in and out, whatever it is that you're doing, congratulations. Most of you should have made money today. And like what that fucking guy said, I told you exactly when to get in and get out. You know how I like to do it. I like the within a trade. I like this portion here. I don't take this portion here. I only take this portion here. And this happens on larger and smaller frames. Of course, you'll get like a big one like that. Then you'll get something like this. Then you get something like this. And this is a 1, 2, 3, 4. So even within these movements, you have smaller movements. He ain't answering shit, I agree. He ain't doing shit right now. It's a fucking free-for-all right now. It's party time. It is, Joey. It is fucking party time. Fed's on party. I'm shocked that he keeps repeating. One last takeaway from today. I am totally shocked that he keeps saying this is a new Fed. I'm like, you're out of your fucking mind. You're just like, you are literally Jerome Powell right now. You might even be more dovish than Jerome Powell. I think that Jerome would have hiked on your ass. So I find it fascinating that he keeps saying that, because he's implying that the new Fed is one of fiscal conservative, like conservative, but he's lying. He's lying his ass off to you guys. He's lying his ass off to me and everything. I was also shocked that they said that he was hawkish at his first FOMC and at the Senate hearing, and I'm like, I didn't hear any hawk in any of that shit. So again, spinning narrative that's just not true. And I didn't take any hawkishness away from today. Zero. That guy is not hawkish in any way, shape, or fucking form. That guy, I'm telling you. Yeah, exactly. EV climbs. Exactly, bro. He wants a little taste of that wealth effect to outrun inflation, right? Fucking Christ, man. So, if you want a top line, the Fed is out of control. Facts. Fed is out of control. And the Fed is also likely being heavily influenced by the White House. That would be my key takeaways from today. The Fed is definitely out of control, without a doubt. And then the Fed is also bought and paid for. 100%. Yes, they do. They control short-term interest rates. You're mixing up long-term and short-term interest rates. Sorry about that, bro. They control short-term interest rates. That's why the long-term went up when he cut the last time. The long end of the yields were compensating when Jerome cut. They do control short-term interest rates. 100% they do. They don't control the long end. You gotta say that. You gotta be more specific. Thanks. The buyers of the bonds are demanding higher yield because they don't believe when the yield goes up on the long end. It's because they don't believe that bond will pay them over time. Like, you can't buy tips right now. You can't buy short-term bond. Well, we had the spike on Monday, so like you can. Like, if you buy a short-term bond right now because it's below the rate of inflation, what you do with that money is you feed it back into, you like wrap it in cat shit. It's like the yen carry trade. So what you're doing is taking short-term loans, basically, right? And you're funding the stock market, basically. Now, if anyone thinks that they can't get paid because of inflation concerns down the road, depending upon the time frame, they'll demand higher yield. Or if they think that the government can't pay it, which is not true, of course. That's okay if the 30-year is climbing. It's okay. If the short end is slowing down and the long end is saying it can compensate for this new deficit and debt down the road. It's actually not that bad that the long end, because the long end can go up and the markets can go up. Now, if we go over, let me go look at. I'll go look at the 30 right now. I'll check it right now, because there is a level where it is bad. I do agree with that too. Let's take a look. It's actually not a bad thing, or can be not a bad thing. Yeah, yield's coming up a little bit, but this is fine. 30-year is fine. Like anything over like that 4.71, right around 5, you start worrying then. I'm actually kind of pissy whenever I can like look at the 30-year, because I felt like we should have taken 100-year bonds for COVID. Yeah, I'm flabbergasted that we didn't just start issuing 100-year bonds. Believe it or not, like I think we should have dumped all that COVID shit. I think it would have helped a ton. I might not be right on that because I'm not a bond guy, but I still like the information that I have, the knowledge that I have, and it could be wrong, but I think issuing like a 100-year bond would have been the way to go for COVID. But we're fine right now. 30 years fine. Market can go up with the 30-year where it is right now. 30 years absorbing right now, so that's good. Like all these arguments, some of these arguments I'm reading, they're just like regurgitated diarrhea. You guys got to start reading Wolf Street, man. Like for real. I got to beg you guys, like start reading that shit. Some of the stuff that I'm reading, I'm like, that's not true either. Like, please start reading it. Now, my concern is on Monday. Like Monday, you get a spike in the 2, the 3, and the 6. That could be an issue. You got to find out when the next. I haven't looked yet, but I got to see when the next auctions are for the 3, the 6, and the 2. You could see a little bit of like a like small bond vigilante stink fest on that, but who's the biggest bear? He did, didn't he? But he didn't say. He said, "Yeah, but you're still misquoting him." So Wolf. So I read that shit all day long. It's like Wolf Richter said, "I'm the biggest bear," but what else did he say? He said something else in that comment, didn't he? I remember that comment. He said something else though. He said, "I'm the biggest bear, but this bubble's not going to pop because of it. You got to like invest what's in front of you." He said that too, right? I recall that statement that he made. He didn't say like I'm the biggest bear, like we're gonna crash. He didn't say that at all. He said, I'm the biggest bear, but you can't fight what these guys are doing. You can't fight what Bessent's doing. You can't fight what Treasury's doing. You can't fight what the Fed's doing. You can't fight what the White House is doing if they get the influence in there. So you just can't. So I mean, you really truly got to see like, if you really want to like see the stock market crash, like bubble burst. What do you need to see? You need to see like retail sales rolling over, durable good orders rolling over. The top line ones, of course, are unemployment, inflation. Those are the easy ones. But like retail sales are through the fucking roof. In-store sales, online sales through the fucking roof. Orders through the roof. And then I wanted to get back to that whole story about the money sloshing around. No one brought that up today. No one brought up where is the inflation today. No one wants to bring it up. No one wants to know where it's coming from. Like literally, the money on the sidelines is out of the box. You've been hearing about that since 2022, right? That sideline money is coming in force right now. And it's party time. All right, there's a new daily low. Oh no, wait a minute. Did we get the daily? Yep, there's a new daily low here. Here's your weekly right here. That's that weekly target. We're very close, aren't we? Extremely close right now. I'm going to start getting long myself soon here. Let's see what we can find here. When doom, like real true doom, like end of the bubble, it's gonna it's gonna be a while. I think it is. The data doesn't support that bubble bursting. I know, and I realize, like I fully understand that what you're reading, like on Bloomberg and on fucking, like CNBC and like the regurgitation mill that's FinTwit, none of the data supports what these guys are saying. Like none of it. Like even this week, like I was reading BBG this week, and they were just like they keep harping on this like thing about the money's drying up, and I'm like, not from the data. Data just speaks completely against that. Completely against that argument. Like private credit and like this is gonna happen, that's gonna happen. It's like it's all fucking masturbation, and it gets clicks and views. It like people do not click. Like it's really simple. Like it doesn't fucking. No one clicks on a fucking article that says, "Hey, there's a ton of money coming into the market right now." Like, it just doesn't sell newspapers. So, you got to like find some kind of like. I'll explain it like this. I'll make it really simple. Like I think I said this in the show before. Like you have a trend up or down, right? Let's say this is your trend over a course of a year, and then you get this other trend in here. And like this is like your seasonal low over here in the stank market, right? And then inside of this data, you get shit like this. Like it's literally like this violence, like every week, every month. And so depending upon what the data, you might have a data set like this, and you'll see like the article written about this data, if it helps and serve them in their narrative. Right? And let's say you have this and the inverse going down, and it's the same thing. So let's say you're getting this like, oh my God, the stock market is great, bro. Oh my God, the stock market is bad, bro. Oh my God, the stock market is great, bro. Oh my God, the stock market is bad. But in fact, this is the line you should be watching, this one right here. And you should also be watching to see if these like 3-month reports or monthly reports, if they're but like your week in, week out stuff, or the stuff that only has a monthly report, you don't want to be looking too much into that without 3 months of that data, or even up to 6 months for what real trend is. This is not real trend. This is where the manipulation of that data is abused. All right, so let's start looking at this here. I'm looking at some SPY options here. You could also probably make more money if you do a triple leveraged QQQ product, because they will print double. So should print double if we go up here. So I'm looking at tomorrow. I'm gonna look at Friday again. I'm looking at Friday here. God damn, those fucking calls are expensive as fuck. Ooh, those are good. I'm looking at 746s right now for Friday. All right, I'm in. I'm on 746 C's for Friday. There might be one more leg down here. Just be aware of like, if you're like a min-maxer, you end up getting like this after the bell bloodbath really quick. I'll add some down here if I need to. But I got a 10-pack. I'm good. I have some exposure here. I should have bought some Meta calls. Let me just look at Meta really quick. I made money today, so hold on. Yeah, Meta's still bleeding right now. I'm gonna get some Meta calls for Friday. Jesus Christ. They're buku expensive. We're right on the monthly right now, too. These fucking things are not cheap. 620. How much are those? Fucking 12 goddamn dollars. Nope, that's 617. I don't think we're going to print the 620. Those could be worthless. God damn, they're expensive as fuck. I hate trading. I hate fucking trading stock. I'm gonna get one. To get one. I'm a cheap fuck. I like 20-cent, 30-cent things and buying like 100 packs of them. I got 617 and a half. Put me over 615. The first target on Meta is 615.08. Second target is 622, 620, 20 cents. And noteworthy on this, we're on the monthly trigger at 583.61. There's also, if Meta after the bell slices quickly down, they've 565.349 if you're buying stock. So if you got a quick move down in Meta and you want to buy it, I've got 565.349. I don't know if that would impact the options tomorrow. We'll wait till after the bell here. I'll put the news squawker on so we can hear the reports. I am long SPY and Meta after the bell here. Friday calls on both.
One minute to go now until we get the market on close.
If you're long SNDK, just stay long. Yeah, I want that one lower level I showed it earlier. I wonder if Meta will put in. I bought Tesla. I would if Meta goes down and trades 565, 540 or any of that after the bell, I'm going to buy that too probably. I have this feeling I'm going to own the stock market really soon here, over the next week. I don't normally own the stock market frequently, so I already own Tesla. I think I'm going to buy, if Meta went down there, if there's a quick jackknife down here, I'll probably buy, if there's any kind of like funny business down here, I'll try to own the underlying.
10 seconds. Market and close imbalance. S&P 500 sell side 750 million. Nasdaq 100 sell side 1.3 billion. Dow 30 sell side 187 million. Mag 7 sell side 233 million.
That's good on Nasdaq. Nasdaq showing the Trader Podcast. I think hit the number for Trader Podcast in 3 days, having a print of 30, not 30%, but getting a call print in the next 3 days. I think it said 3 to 5 days. So Nasdaq 100.
Reminder, in about 10 minutes' time, we get earnings from Meta and also Qualcomm at the top of the hour. Meta reporting their Q2 2026 earnings. EPS estimate of $7.15. Revenue estimate of $60.24 billion. Qualcomm EPS estimate of $2.22. Revenue estimate of $9.62 billion, and they'll be reporting Q3.
I still own Snap. What a piece of shit. I think I've owned that fucking stock for like... I gotta go look at Snap. I haven't looked at that fucking thing in months. I bought this thing in April lows. It did go up and trade $6, but I want this fucking thing to trade like $8 or $10. All right, stays. I want it out of my fucking account pretty badly here. Just check one more thing here. Oh, I think I want to buy some TQQ too. I'm going to add some TQQ into the bell here. Just got to wait for the last couple seconds there. I just added TQQ.
5 minutes ago now we get Meta earnings and Qualcomm earnings. Meta EPS estimate of $7.15, a revenue estimate of $60.24 billion. Qualcomm EPS estimate of $2.22, revenue estimate of $9.62 billion. And then in about 10 minutes' time, we get Starbucks earnings for their Q3 2026, EPS estimate of 65 cents, revenue estimate of $9.16 billion. Saudi Arabia is seeking to build international coalition to protect the Red Sea shipping from Houthi attacks, according to two people familiar with the deliberations. Nasdaq falling 10% below June 1st intraday record high. Also, according to two people familiar with the deliberations, the exact makeup of the coalition is not yet clear and is still being discussed with dozens of nations.
Just a note here in Starbucks, I'm taking a look at it right now. It doesn't look good on a weekly basis. It looks like it wants to go down more, but it is being accumulated. If you want to trade Starbucks, if you like the stonk itself, I do like it trading. I would still like to buy it at $98. $98 on Starbucks. The intraday, hourly, and daily look like shit. But the weekly looks. Excuse me. The daily and the weekly look like. The hourly and the daily and the weekly look like shit. But the monthly and the quarterly look great on it. So anything around $100, game on to buy it. Anything buying like 93, 98.30, somewhere in there. I don't think that I like it today for the close long. If you're interested in it long, I don't like it. Just some quick cursory look. Yeah, I'd like to see it lower, like $98. Coming to the close, bunch of reports coming out in just a few moments. Be prepared if you need to add to your position. Be right down here in this W. Also note that this is S4 and S5 down here. This is an auto buy for the market. Two sigma move on an intraday. On SPX, we are parked on the 730, just so you know, 730. That's the intraday target for Gamma that we looked at this morning. We never got down to the 720s. So we're at 7,300, which is the bottom of the market for Gamma at the moment.
We get earnings from Meta and Qualcomm. Ten seconds. Qualcomm with their data coming through. The third quarter adjusted revenue of $9.95 billion, a beat on the estimate of $9.62 billion. Also, Qualcomm third quarter adjusted EPS of $2.21, in line with estimates. Qualcomm sees fourth quarter adjusted EPS of $2.05 to $2.25, compared to the estimate of $2.35. Qualcomm sees fourth quarter revenue $9.7 billion to $10.5 billion, compared to the estimate of $9.95 billion. They also say China OEM handset revenue reached a bottom in Q3.
Oh, look at that. That's not a near. I missed this right here. See that strike down there?
Qualcomm shares post-market.
See it right there?
Just seeing a slight rise of 0.62% after their earnings.
I missed it. I wasn't paying attention.
9M capex of $1.58 billion. Meta coming through now with their earnings of adjusted revenue, second quarter ad revenue of $59.36 billion, a beat on the estimate of $59.7 billion. Second quarter revenue of $60.
Say it, you fucking bear.
$2.4 billion. Meta says that they see the Meta second quarter EPS of $6.80.
That was the strike at 563, 565, 343 just there. You want to long that? If you want to buy Meta, you buy it.
Also, Meta raising lower end of expense outlook. Meta sees third quarter revenue of $61 billion to $64 billion, compared to the estimate of $63.17 billion. Meta second quarter family of apps revenue $60.37 billion, a beat on the estimate of $59.77 billion. Reality Labs revenue $431 million, beat on the estimate of $428.7 million. Reality Lab operating loss of $4.62 billion, compared to the estimated loss of $4.45 billion. Family of apps operating income of $23.39 billion, a beat on the estimate of a miss in the estimate of $26.11 billion.
I'm going to buy Meta here.
Coming through now with their earnings. Fourth quarter EPS of $4.81, adjusted EPS of $4.74, a beat on the estimate of $4.25. Cloud revenue
$59. I want fucking
$59.3 billion, a beat
shares.
on the estimate of $58.71 billion. Revenue $90.01 billion, beat on the estimate of $87.72 billion. Operating income of $40.6 billion, a beat on the estimate of $39.02 billion. Microsoft fourth quarter Azure and other cloud revenue, excluding FX, plus 43%, a beat on the estimate of plus 39.6%. Microsoft says $3.2 billion gain from Anthropic investment in Q4. Fourth quarter intelligent cloud revenue $39.31 billion, beat on the estimate of $38.17 billion. Azure, and it's also with their, just looking at some other bits now, so they say Azure revenue surpassed $100 billion. Microsoft fourth quarter 365 consumer cloud revenue increased 24%.
Still no fill on Meta.
365 Copilot reached over 30 million paid seats. Meta expects third quarter 2026 total revenue to be in the range of $61 to $64 billion. So seeing shares of Meta falling 5.6% after reporting Q2 earnings.
I still don't have a fill on Meta.
Seeing shares of Microsoft up around 3.3% after their earnings. Qualcomm shares down 5% post-market after profit view misses. Seeing shares of Meta now down 9% after their earnings report.
Still no fill for me in Meta.
Microsoft says that Xbox content and services revenue fell 10%. Qualcomm also sees fourth quarter revenue between $9.7 billion to $10.5 billion compared to the estimate of $9.95 billion.
Change this order.
So it's waiting on earnings from Starbucks. The EPS estimate is 65 cents, revenue estimate of $9.16 billion. Microsoft fourth quarter capex of $35.8 billion compared to the estimate of $35.22 billion. Fourth quarter capex, including leases, of $41 billion compared to the estimate of $42.05 billion. Starbucks, with their earnings coming through now, they see third quarter net revenue $9.38 billion, a beat on the estimate of $9.16 billion. Third quarter comp sales of plus 7.9%.
All right, okay, I'll just do market. No limit order, just the market order.
Of plus
or buy order.
3%. They also raised their fiscal year guidance for 2026. Starbucks sees year
I'm good, I'm in.
comp sales growing near 6%. Starbucks third quarter adjusted EPS.
I got my baby. I got Tesla. I got Meta.
And they see fourth.
I'm gonna own all the shitcos.
At least plus 6.5%, beating on the estimate of plus 4.81%. Also, Starbucks third quarter adjusted operating margin of 14.4%.
It's almost $100,000 in total.
This is again seeing shares of Meta sinking 9% as mid.
No, don't freak me the fuck out there, bro.
Misses estimates. Also, just some other little tidbits from Meta. Meta's quarter included $1.18 billion severance expenses on May job cuts. Microsoft says fourth quarter OpenAI investment impact on EPS is minus 7 cents. Starbucks sees fiscal year adjusted EPS of $2.55 to $2.65 compared to the estimate of $2.25 to $2.45.
Up 16 on Meta right now. Okay. I'll see you all tomorrow, 9 a.m. You guys all have a wonderful evening. Thanks for joining me today on the FOMC rate decision. I'll see you all 9:30 in the morning. Just take a note that I will be leaving the show early on Monday for a 2:30 appointment. I appreciate you showing up today. You guys have a great evening. See you tomorrow, 9:30. Fuck yeah. It's another good day. My total account is up. Hold on. My total account's up 25% today for all in. Yeah, it's over. The credit's going.